markets are becoming a lot less responsive to these headlines.
There is still a lot of hope and optimism in this market.
It was time for a bounce.
There's a broadening happening across markets.
The market is over-exuberant in terms of a fast fix to all of this.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, approaching a ceasefire deadline. The White House promising there will be no extensions. As Fed Chair nominee Kevin Warsh is facing a hearing on Capitol Hill, Apple's longtime CEO Tim Cook is calling time on a 15-year run. That stock inching lower this morning.
Being pretty consistent, though, the person who is pegged to be the next CEO, John Ternus, is somebody who's been at the company for 25 years and is a hardware guy. This is what a lot of people keep saying. On one hand, you could say that Tim Cook has been very much a software man, looking to bring things into the new world when it comes to some of the services on the platform. This is hardware. This is a question of how Apple will adapt to AI at a time when they have fallen behind and chosen to do so as they watch other peers try to get ahead.
I feel like Tim Cook is calling time-ish. He's still going to be the executive chairman, and his portfolio might be the most difficult and important for any executive right now operating in the United States. And that's going to be maintaining this relationship with the White House and President Trump, and also maintain the relationship when it comes to Beijing.
Overseen tremendous growth. Let's give the guy credit. What a 15-year stretch. Tremendous growth. Supply chain master. Yes, some high-profile failures along the way. The Vision Pro, not a fantastic success, but some tremendous success along the way. The buyback king. I think we have to remember that he is the king of buybacks. The capital return program that's generated, 2,000% gains on this stock over that period. Phenomenal.
And something that a lot of people hailed. At the same time, a lot of criticism about not being forward-looking enough. At the same time, you did have the AirPods, you did have the Apple Watch, you had some products, but otherwise it still is very much the iPhone. That is the core of the business. Key question for John Ternus is, what do you do next, given the fact that you need to have something new to really drive and propel gains in this company?
That's my question too. Is this a continuity candidate? And this is a moment where you want a continuity CEO at the top of Apple, when many people are looking for an era of innovation. That's not the only thing we're watching for. Later on this morning, of course, 10 a.m. Eastern Time, we'll be focused on this. Kevin Warsh, testimony on Capitol Hill. Politico leaking some of that testimony just yesterday. Some interesting highlights came out of that, a commitment to independence. And I took away the following. The Fed's got to own it. The Fed has to own inflation. It's their job. It's their responsibility. And I think he's going to be pushing that line pretty hard later this morning.
Which raises this issue. Are people expecting an overly dovish Kevin Warsh as Fed chair? Are they going to be expecting him to push on a string that he's not going to push on, because ultimately they've got to get inflation back in the bottle? And at this point, we've been talking about this. Treasury Secretary Scott Bessent talking about how this might not be the time to cut rates, essentially giving a green light to whoever might come in next, Kevin Warsh, to essentially hold tight, even in the mid a lot of pressure from President Trump.
I think it was a little bit of a pushback at the current Federal Reserve and Jay Powell. Inflation is a choice. Well, this Federal Reserve has made inflation a choice that they're basically going to accept 3% as the target. When it comes to this hearing, though, it is going to be box office. I love this from a member of the Senate Banking Committee, Senator John Kennedy. The president's current nominee will be ultimately confirmed. In what decade that happens, I'm not sure.
Yeah, the timeline is tremendously uncertain. I've used that word a few times already this morning, but it's true. I've got no idea when he gets appointed. I've got no idea who's at the Federal Reserve by the time we get to the end of May. And I imagine that's a key question for a lot of market participants going into this hearing.
Can Kevin Warsh sweeten his way into Tom Tillis's heart to overturn his commitment to not allow any candidate to go through before the inquiry into the Federal Reserve is resolved? Ultimately, that's the key question. Can he sort of sweet talk his way? Can he charm his way into Tom Tillis's heart? The answer probably is no. I'm sure that he's watching, and I'm sure that he would say it's not about charming.
Senator Tom Tillis likes Kevin Warsh. He's excited about Kevin Warsh being the next Fed chair. His issue is the DOJ investigation. I think the real question is, will the president just drop this investigation, take the off ramp? The president can still say he doesn't like what the Federal Reserve did, but does it mean it's criminal? And that's the question.
4 hours away. That testimony just around the corner. Looking forward to that hearing in front of the Senate Banking Committee. Coming up this hour, we'll catch up with Tom Forte of Maxim Group as Apple names its next CEO. Chris Verrone of Strategas ahead of Kevin Warsh's confirmation hearing. And Steve Yates of the Heritage Foundation as President Trump signals no ceasefire extension with Iran. We begin this hour with our top story. Apple's Tim Cook stepping down following 15 years at the helm, naming John Ternus as its next leader. Bloomberg's Ed Ludlow tracking the story and joins us now for more. Good morning, Ed. All change at the top of Apple.
All change, but not until September 1st. That's when it becomes effective. And as you guys know, Tim Cook becomes executive chairman, where he probably has a more focused brief. You know, talking to policymakers, it will include supply chain. And in his internal memo to staff, you know, he was really emphasizing, I'm not going anywhere. You know, that he will continue to play a strategy role from that executive chair position. All things can be true. It was interesting what Lisa was talking about. He's both the continuity candidate, as heir apparent is John Ternus, as well as the hope internally that he will do things differently to Tim Cook. You know, John Ternus, he's a hardware guy. He's an engineer and he's a product guy. But he has been a very key voice internally on some of the projects that have not worked. Apple Car, Vision Pro, voicing concern that those won't go anywhere in the long term. He's also been a key voice on some of the bigger swings, like the MacBook Neo, entering the lower price point category, disrupting that laptop market where there are a number of incumbent Chinese players. So this is really interesting. The question comes back to AI, of course. What we know is that John Ternus has been a big advocate of using AI internally. We don't have as good a read on how AI is going to actually show up on the iPhone, and that's been the story for Apple for a long time. But John, I think you noticed something really important, which is your audience, be they, you know, portfolio manager or their clients, will thank Tim Cook for the 15-year era that he was CEO. The shareholder returns and performance of the stock and the company's top and bottom line, incredible.
Phenomenal gains. Ed, looking forward to your coverage throughout this morning. Ed Ludlow there, host of Bloomberg Technology. Catch Ed throughout this morning. Tom Forte of Maxim Group with this to say. The naming of Mr. Ternus as CEO is an indication that Apple still considers itself as a hardware-first company. We look to see how well Apple capitalises on AI. Tom joins us now for more. Tom, welcome to the programme. Is this a continuity candidate? And is that what this company needs?
This is absolutely a continuity candidate, as you're referring to it. I believe Tim Cook handpicked John Ternus to succeed him, as Steve Jobs handpicked Tim Cook to precede him beforehand. Does Apple need a continuity candidate? So I think that we'll be measuring John Ternus's tenure at Apple on the company's ability to capitalize on AI. How long can he extend the iPhone life cycle? It's already 19 years. And will he be more like Steve Jobs and less like Tim Cook, and be able to determine what the next device that consumers want that they may not know that they want? Smart glasses, foldable iPhones. Will they give the car another attempt? Will they work on more connected home devices? So those are the things we'll be measuring John's performance in the future.
Tom, why now? Why is Tim Cook stepping down at a time of tumult ahead of what could be the biggest revolutionary aspect or evolution in technology?
I think you could argue, Lisa, that why now? Tim Cook has got the company in an amazing position when you think of the challenges it faces. He's diversified the supply chain so they're less dependent on China. They now rely on China and India and Vietnam. At least on a near-term basis, he's addressed the AI challenges by having a strategic partnership with Google to ultimately enable them to enhance Siri. And he hands over a very strong company when you think about that 20% growth in iPhone revenue in the December quarter. So I think why now? He's handing off a very strong Apple to John, and he's addressed a lot of the near-term challenges for the company.
One thing, Tom, that we've been noting for a number of months now is that the other big tech companies have all been investing hundreds of billions of dollars into the tech evolution. Apple's been relatively investment light. They have kept their kind of capital light profile. Do you expect that to change as Apple tries to be more forward-looking and come up with new products?
I don't expect it to change unless John pivots the strategy and Apple changes its emphasis on AI to focus perhaps on services or things where they need more raw compute power. When you think of the heavy investment spend, a lot of it's by the hyperscalers, Amazon, Google, Microsoft, and a lot of it's come from Meta platforms. So then the question is for John Ternus, how long can Apple maintain this hybrid model, called capital light relative to its peers in AI? And I would say it depends on how much raw compute power he intends and if he wants to offer AI as more of a services, including at the enterprise level.
How much bandwidth will Ternus actually have with, of course, still having Tim Cook as the executive chairman?
I think he's going to have tremendous bandwidth. So when you think about Tim Cook's success at Apple, he's managed the governments of US and China beautifully. He was a steady hand following the untimely passing of Steve Jobs in 2011. So I think that Tim Cook, as executive chairman, will be very supportive to John, but ultimately be John's vision for the future that I think drives Apple shares from here.
Tom, just finally, Tim Cook, I was going through the numbers yesterday. Just how much stock has he bought back over the last 15 years? Just how much has that company changed from that vantage point?
I don't think they ever, achieved cash flow neutrality or that sort of thing. But yes, he has done an amazing job of returning that tremendous free cash flow to shareholders, initiating a dividend, buying back stock. I like to think of the $4 trillion from $350 billion performance in his tenure, which is truly superb.
Crazy. Tom, thank you, sir. Tom Forte there of Maxim Group. To call him the king of capital returns is not meant to be derogatory. It's just a statement of fact. I think it's north of $600 billion in buybacks under Tim Cook.
I don't think any stock investor was personally offended when you said that. I think that a lot of people
I feel like
were very
it reduces
happy.
his tenure just to capital returns instead of all the other things.
In fairness, some people said that he was kind of a continuity character, and some people said he wasn't innovative enough. He didn't take Apple into the new era to be the trifold type of iPhone or anything like that ahead of, say, Samsung. Key question is, will John Ternus be that? And will that be necessary? Because they've been rewarded, frankly, for not making the same investments that some of the other big tech companies have.
Apple in the pre-market down by 0.3%. I think that speaks to the continuity that so many people are talking about at the moment. Let's give you an update on stories worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. Sticking with that top story, Apple naming a new CEO, hardware boss John Ternus will replace Tim Cook on September 1st. Ternus has led the hardware engineering division since 2021, and sources say he's a strong believer in AI, where Apple, of course, has struggled to make an impact. Kevin Warsh's confirmation hearing is set for 10 a.m. today. President Trump's pick to be the next Fed chair will face questions about central bank independence and his rate outlook. Lawmakers may also ask about his personal wealth, which includes assets worth at least $192 million. And President Donald Trump signaling he is unlikely to extend a ceasefire with Iran that's set to expire on Wednesday. The president telling Bloomberg he is, quote, not going to be rushed into making a bad deal. Vice President J.D. Vance heading to Pakistan to resume negotiations, while Iran has yet to confirm if it will participate in those peace talks this week. That's your Bloomberg brief. John.
Yahira, thank you. More from Yahira later this hour. Up next on the program, standing in the way of the next Fed chair.
I have no intention of allowing any Fed board nominee to move forward out of committee and to be confirmed until this matter is settled. Look, this is foundational to Fed independence.
Up next, we'll catch up with Chris Verrone of Strategas, live from New York City this morning. Good morning. .30 Eastern Time, more economic data at 8:30. We should get US retail sales after the closing bell. You'll hear from United Airlines. The airline's very much in focus, given the pressure on them over the last 2 months or so. Then this at 10 a.m. Eastern Time. Kevin Warsh in front of the Senate Banking Committee on Capitol Hill. Looking forward to that. The scores going into it look like this. Equity futures bouncing back higher by 1/3% on the S&P after snapping a 5-day winning streak on the S&P 500. We snapped a 13-day stretch of gains on the Nasdaq 100 yesterday, this morning, up by 0.4. Under surveillance this morning, standing in the way of the next Fed chair.
The initial inquiry and the investigation was a flex to try and get the current chair to step aside. I have no intention of allowing any Fed board nominee to move forward out of committee and to be confirmed until this matter is settled. Look, this is foundational to Fed independence, and I, for one, am going to stand on the side of certainty, and Fed independence is what delivers certainty in our markets.
So here's the latest this morning. Fed chair nominee Kevin Warsh heading to Capitol Hill for a confirmation hearing before the Senate. Senator Tom Tillis still vowing to block the nomination until the Justice Department drops its probe into the central bank. Tyler Kendall has more. Good morning, Tyler.
Hey, John, good morning. Well, I caught up with a senior aide to Thom Tillis yesterday who told me that the senator's position has not changed and he will continue to block Warsh's nomination from advancing to the full floor until the legal matter against Fed Chair Jerome Powell is resolved, though this aide says that Tillis wants to vote for Warsh as this confirmation hearing gets underway. But he really can make good on his threats to block the nominee, considering Republicans only hold a 13-11 majority on the panel. Meanwhile, a White House official tells us that President Trump will not back down on this Department of Justice investigation into whether or not Powell misled Congress, this very Senate Banking Committee, about the Fed's renovations to its headquarters here in Washington, allegations that Powell denies. Now, the Trump administration, as you well know, was handed this potential off-ramp last month when a judge ruled against the subpoenas in that case. But still, at this point, the DOJ says that they will appeal that decision. Now, for Warsh's part, Bloomberg News did obtain a copy of his prepared remarks where he is expected to vow to protect the central bank's independence. He's expected to say, in part, quote, "I believe that monetary policy independence is earned and better policy decisions crafted by steering clear of distractions." Senator Tim Scott's team says to expect questions about charting monetary policies when I checked in with them yesterday because, John, this will mark the first public remarks from Warsh about interest rates since his nomination and since the war in Iran has brought up those energy prices.
Looking forward to it. Tyler, thank you. Tyler Kendall down in the nation's capital with us here in New York. Chris Verrone of Strategas, a bed company. Chris, good morning.
Great to be here.
The words of Kevin Warsh, inflation is a choice, the Fed must take responsibility for it. Does that sound like a man who's about to cut interest rates?
Listen, I think at the end of the day, when you even look at the Fed funds futures market here, cuts are coming back into the market. So I still think we'll get one or two by the end of the year. Look at December 26 SOFR or June 27 SOFR. You've really priced back a cut in as we start to move towards the end of the year. So, yes, I do think ultimately we are working towards a cut here. I think the bond markets figured that out kind of following this kind of initial panic around the start of the war. 2-year yields come back down. 10-year yields, I mean, for as chaotic as the world has been, we're sitting here with the 10-year yield still at about 4.25. Not a lot has really changed from the bond market's view here.
And stocks close to all-time highs.
At all-time highs, right?
Let's get into that.
Yeah.
Why do you think this is more than just a position squeeze?
So when you go back and you kind of take stock of what the leadership before the war and now as we think move towards the ending phase, it's not that terribly different. I think really important yesterday, cyclicals made new relative highs versus defensives. That's kind of our view of how the market perceives the economy. So things still in pretty good condition from that perspective. You know, when you look at the quality of this advance under the surface, something like 50% of the S&P made a one-month high on Friday. That's a really good reading. It tends to lock in some durability to the advance. Something like 60% of the Russell 2000 made a one-month high. I think this is suggestive of more than just a bounce from the March lows. There's some durability behind this. What it means for the next couple of weeks with a very overbought market, I do not know. But if you're looking 6 months out, I still think we're higher than where we are here.
Just from a logic perspective, does it make sense to you that consumer discretionary should lead at a time where the consumer is being crimped by higher oil prices?
As we wrote a few weeks ago, and I would say again loudly this morning, the less you know in this business, right?
That's our motto,
right?
Chris.
The less you know. There's a lot of things about the last 4 or 5 weeks that seem to defy the logic, and I think oil might be the best example. I think the high in oil was March 11th. The headlines only got worse thereafter, yet oil could not make new highs, right? So we look for things that behave differently than the consensus or the headlines might imply. I think discretionary is a great example of that. 80% of discretionary made a one-month high this week. That's the best reading we've seen in about 4 years. It's the first legitimate sign of momentum from the discretionary sector that we've seen in a number of years at the most unusual of times. So we can see that the market knows a lot more than we do. It's kind of a comforting feeling that we don't have to have it all figured out. And I think the market is saying something out there is more constructive for discretionary than people believe.
Not to be a conspiracy theorist.
Yeah.
But I don't feel particularly comforted by the fact that the less you know, the better off you are. And I feel also like there's an increasing number of people who are concerned that maybe markets are trading off something that they don't know, which is raising concerns about whether they want to get involved in that. How do you deal with concerns about that?
You know, Lisa, I think if we were sitting here the last week of March 2020 or early April 2020, we'd be having the same discussion because it was exactly when consumer discretionary really started to inflect. I think if we were sitting here in summer or fall of 22, we'd be having a very similar discussion as, frankly, inflation expectations begin to come down and discretionary start to turn up. So the market is 2 or 3 steps ahead of you or I. And I think the message here, frankly, is one that we're reinforcing a lot of the themes that were in place pre-war. And you see it with the power stocks, the industrials, the CapEx. I mean, the velocity with which things like we look at tech equally weighted, the way that tech equally weighted has gone on to make new highs here, I think is pretty compelling.
Well, your whole thesis is predicated, though, on the war ending. What if it doesn't? We don't even know if the Iranians are showing up in Islamabad.
I would disagree, Maria. I would say my whole thesis is predicated on this is not a financial event. And when you go back and you look historically and you drew every geopolitical event on the S&P chart, you wouldn't really notice. They tend not to matter very much. If you drew every financial event, you would notice because they do tend to matter. So our kind of main part of our call is what's happened in Iran is not spiraling into a global financial event. And you see that through credit spreads, basically back to where they were pre-war. The banks have acted fantastic throughout all of this. I mean, even the private credit stocks are, I think Apollo hasn't made a new low since March 2nd or something of that matter, right? So the places where I think the sentiment was probably most apocalyptic, credit, financials, private credit, have actually held their own throughout all of this. So I don't think we're spiraling into that more serious event.
It is an energy event, though. It is an energy shock for the rest of the world.
Yeah, listen, crude's certainly meaningfully higher than it was in January.
Crude, helium, LPG, naphtha.
Yeah, and yet discretionary is working here, right? So there's one of those two things is wrong. And we're ultimately trying to figure out what, and also let's keep some things in perspective. This economy has operated perfectly fine with crude in the $80, $90 range. Let's not pretend that's $200 oil. So I just want to put that in a little bit of perspective here. You've actually had a pretty good correction in the energy stocks over the last 3 or 4 weeks. You're kind of probably getting to a point where they actually might be timely again on the long side. But I think the bigger picture here is when you look at what the leadership is telling us, what the internals have looked like on this rally, I think at worst it's a B plus rally, and I think ultimately it's locked in some duration to this advance.
I think energy stocks might be flat since the war started.
Yeah.
Which is kind of crazy.
All the leadership in energy came between really September and February 27th. Pretty remarkable that, again, in the spirit of the less you know, right, the market knew something well before you or I did.
I've been tracking energy shock, rate shock, growth shock. We've had the energy shock. Yeah. We had a rate shock for about 5 minutes.
Yeah.
There was a real concern, I would say, that some of these central banks would shift to a much more hawkish stance, particularly the Bank of England, the ECB. I think they've backed away from that since then. So we can sort of park that shock, the rate shock, for now at least. And a growth shock has been parked alongside with it. Whether that is the right call to make, the right thing to see, I don't know, but that's the way things are playing out.
Evidently, the less that I know, the better I am. And right now, what I am looking at is, and getting a little worried about, is that in the summer, when some people want to go to the south of France, the south of Italy, or go to Asia, those flights might not go. And we're seeing that increasingly from some of the airlines. So those are some of the tangible potential breaks. But, you know, the less I know.
Well, I mean, I think the irony of that is new high Marriott, new high Viking Cruise, airlines basically at the high. So, like, the market seems to have moved on to something else, I think is the broader point. And John, just on rates, if 10s were going to 5, why didn't they go to 5? Right, there was every opportunity for a few weeks there when there was some pressure in the bond market. You saw European yields start to go, and they couldn't get U.S. 10s above 445. The curve is re-steepened here, albeit modestly, but I do think it's important. If you want to draw some lines in the sand, 445 on 10s, maybe 40 basis points in the 210 curve, call it 400 on high-yield CDX is kind of the lines that you'd want to watch for, hey, are things starting to deteriorate here again? We don't see it yet.
425 on 10s this morning, basically the upper end of the range, the pre-war range on a 10-year yield.
It's just shocking how stable the 10-year really has been. I mean, ultimately, that has been the ballast for a lot of this risk rally.
Hey, Chris, good to see you, buddy.
Great to be here.
Great to catch up. Thank you. Chris Verrone there at Strategas. Coming up on the program, Steve Yates of the Heritage Foundation as President Trump signals no extension on a ceasefire. Plus, Yahara has your morning movers. Amazon investing an additional $5 billion in Anthropic. Snapping a 5-day winning streak on the S&P 500 in yesterday's session. It bounced this morning by a third of 1%, up by 0.36 on the NASDAQ 100. On the NASDAQ, 13-day streak snapped yesterday. That 13-day winning run, gains of more than 16% or something like that. Bramo, what a stretch for the NASDAQ 100.
Yeah, and it was just snapped. It wasn't as though it was some sort of massive sell-off, and today people are coming right back in. And this is ahead of what we're expecting next week with earnings from some of the big tech giants amid some pretty big moves in terms of investments as well as personnel management moves at a time when potentially these tech companies are on the cusp of revolutionizing how we live.
We'll talk more about Apple a little bit later in the program as well, a change at the top of that company. Let's talk about the bond market struggling to shake up fixed income. Mr. Verrone over at Strategas put it well. This bond market unmoved by so much of the last 1 month or so. The 10-year 4.2569 yields just about unchanged. And as I've repeated several times, at the upper end of the pre-war range on a 10-year yield. Elevated, yes. Breaking out to new ranges, not quite.
I think Chris Verrone's onto something when he says the less you know, because ultimately, if you scrutinized the leaked commentary from Kevin Warsh that was published by Politico, you would think he was still the hawk that he used to be, and that he'd be inclined to actually keep rates where they are or even hike them, talking about how keeping inflation at a high level, as it has done in recent years, is grievous harm is done to our citizens, talking about how it's necessary to wrangle it under control. You'd think that bond markets might care, but no, they don't care at all because they're looking at what he does, not what he says. And potentially this is all just lip service to try to get the job.
Yeah, I don't know which one it is, but I was intrigued by the comments. I believe that monetary policy independence is earned. Inflation is a choice, I think, is the line that jumped off the page for me when I first saw that testimony from Politico just yesterday. Inflation is a choice.
Yeah.
That seems to be a screaming message for the current Federal Reserve.
And the Fed must take responsibility for it, to your point. Exactly. So right now the market's saying, show us something that really will move the needle, and it's not going to be that.
Well, you thought it would be this. Brent, WTI. Hasn't been that either. Brent crude around 95, WTI around 88. We're down about 1%, let's call it. Going into talks. Now, potential talks, because I still don't think we're really sure whether these talks are happening and at what level.
Potential is the operative word there. I spoke to a Pakistani official who said this to me. Fingers crossed that the talks happen tomorrow. We have not got a readout from the Iranians on whether or not they're going to attend. They have not left. The U.S. delegation has not left the United States. So at the moment, potential talks, but TBD.
Fingers crossed. I think we're all hoping for progress on that point, that's for sure. If you're just joining us, welcome to the programme. Futures back at the green again, high by a third of 1%. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with none other than Apple. Shares are down some 0.3% in the pre-market, trimming earlier losses on that bombshell CEO transition that will see John Ternus lead the company. And looking through analyst notes this morning and hearing your interview with Tom Forte, they largely see this as a continuity move, with Morgan Stanley saying that this does little to alter Apple's core strategy, and the market's trying to decipher whether that is a good or a bad thing in the age of AI. And moving on to a company that is, unlike Apple, spending big on AI, that is Amazon. Shares are up 2.7% in the pre-market because it plans to spend more, investing another $5 billion into Anthropic, potentially $20 billion more over time. But this partnership will see Anthropic spend more than $100 billion over the next decade on Amazon's chips and cloud, locking in long-term demand for AWS. And that move is filtering through Amazon's supply chain, with its suppliers like Astera Labs up nearly 7%, Credo up 5% in the pre-market, since that expanded partnership means more demand for their connectivity solutions used in data centers. John.
Yahira, thank you. More from Yahira later this hour. On our radar this morning, President Donald Trump saying he's unlikely to extend the Iran ceasefire. The president telling Bloomberg the U.S. won't be rushed into a bad deal. The Vice President, J.D. Vance, expected to lead the negotiations. Elsewhere, Fed Chair nominee Kevin Warsh testifying before the Senate Banking Committee this morning. His opening remarks highlighting the importance of Fed independence. The DOJ probe into current Fed Chair Jay Powell threatening to block Warsh's nomination. And finally, the Apple CEO, Tim Cook, stepping down after 15 years at the helm. Cook handing the reins to hardware boss John Ternus in September. Ternus expected to bring a more decisive leadership style, sharpening Apple's competitiveness in AI.
Two takeaways. I think the first is that the guy who's coming in, John Ternus, is a hardware guy who's been at the company for 25 years. What are they going to create next? And then to AMH's point before, I think it's a really important point just to be highlighted again. Tim Cook is stepping into a new role of essentially diplomat. He's going to go around the world and talk with all of these officials to understand and maybe guide some of their policies. That might be the more interesting move, given just how political some of these companies have gotten, especially in an era of AI.
That's why I wonder how much bandwidth the new CEO is going to have when you have your former boss basically still hovering around, but you're ultimately the decision maker. But maybe it gives him more time to actually focus on AI, which Apple, of course, has a bit been behind the 8 ball on.
A shout out to Piecyk over at LightShed, who last summer came on this program and talked about the need for a change in leadership. Now, the stock move this morning, down by a few tenths of 1%, signals continuity. My question for Piecyk will be a pretty simple one, and we've already asked it a few times this morning. Is continuity what he believes this company needs?
And it's not clear the answer is yes, given the fact that ultimately it's been the lack of a new innovation to really drive the company into the new era. I will say, though, it's kind of nice to have somebody else to fly around the world and talk with the presidents and prime ministers so you can actually focus on the business. I imagine a lot of CEOs feel like they're spending a lot of time in Washington, D.C. and are getting distracted somewhat from managing their own businesses. So I wonder if this is what we're going to see going forward, just more broadly.
Apple down just 0.3%. Let's turn to the president. The president of the United States telling Bloomberg the US-Iran ceasefire expires tomorrow night. The vice president, J.D. Vance, expected to travel to Pakistan for a second round of talks. Steve Yates of the Heritage Foundation writing the president made clear that he has a lot of cards and he's willing to use them. We have the last gasp of the IRGC trying to flex their muscles, but they're really at this point no match. I'm pleased to say that Steve joins the programme now for more. Steve, welcome to the show. It's good to see you, sir. Let's talk about this messy kind of moment that we're in right now where both sides trying to find a bit of leverage. Why do you believe the US is in a stronger position?
Well, basically because everything the United States has sought to do in unwinding this multi-decade intractable problem has worked better than someone could reasonably expect at the beginning of the process. There has been overwhelming military dominance strategically. There's been tactical hits that have come back from time to time. When you start looking at going from a strategic force of on the cusp of multiple nuclear weapons, as international assessors and inspectors have reported, not just American sources, and you look at the large number of organized military forces, you have a divide now in Iran between regular military and the IRGC. All of them, from leadership down to true capabilities, are degraded. And we have new tools that have been opened up between round one of negotiations and whether we get to round two in the next day or two or it takes longer. There's been an immense toolbox of financial tools that have opened up to Secretary Bessent that really aren't open to public scrutiny, that are because Iran lashed out at allies. And so international financial access and tools that could be just as crippling economically as the military has been in that strategic sense. This is a correlation of forces that can push for a change. The question is, what kind of a change? If you're not going in to occupy and run a country, which we absolutely are not doing this time around, you're going to end up with this messy situation of a disaggregated leadership that is a bit schizophrenic on communications, some elements lashing out, and you have to manage that de-escalation over time.
Well, if that's the Iran we're left with, what does that mean for stabilization of the region?
Well, in some ways, the region is much stronger. If you look at the Arab allies that have a lot of capital, that are determined to invest in a number of different ways, first and foremost in their own capabilities, having strong independent allies is actually a net benefit to the United States. If we have to surge anywhere in the world from the Indo-Pacific to our own hemisphere, it helps greatly if we have very strong, vested and determined allies who can somewhat keep the lawn mowed in their own region without us having to be there for daily maintenance. It doesn't mean we leave. It just means that it's a much better set of options for us and for the allies, for that matter. I think there's been a clearing of the air somewhat on where there are real powers and abilities to influence. The United Nations has been AWOL in this. Europe, in many ways, has not influenced things very much beyond going on television or public events. And some allies in Asia are stepping in to balance things in different ways, too. So some of these changes if they are sustained, changes in energy dependence and flows that could greatly affect China's geostrategy and the U.S. relative power there in those negotiations. So a lot still to unfold, but I think on balance, there's a lot of geopolitics that are a net advantage while there's still a lot of risk to manage.
Steve, as you know, the Iranians are notoriously famous for dragging their feet when it comes to negotiations. Do you even think we have talks tomorrow?
I'd give it about a 50-50 chance, but I don't think it matters in the long run. I admire the administration's willingness to do this. It's one of the things that kind of goes counter to a lot of the cartoon caricatures of President Trump and his style. This has been a very gradual escalation of power and use of tools. It's been somewhat patient. It's much different than sort of the flash bang of going into Iraq before and pushing for regime change and de-Baathification. There's a higher tolerance to work with remnants. That is kind of more of a centrist and pragmatic approach than people might have assumed.
Steve,
and so I think that it doesn't matter as much if the talks happen in the next 24, 48 hours. That is great if there is a sustained deal that comes of it, but I'm very much in the don't trust, just verify category when it comes to who you're negotiating with.
With all due respect, there's this question about the impulsivity or whether this was orchestrated or whether this was a patient effort, given the fact that a lot of allies were not aligned or aware of exactly what was happening. And now there's a lot of pushback, at least publicly, from both the Europeans as well as from some of the Gulf allies, talking about how you made this mess, now clean it up. How do you see it differently?
Just the facts of on the ground are completely counter to that narrative. We have politicians in a lot of geographies whose audience is larger than their ability to influence. They have meetings about someday going in and protecting freedom of navigation, but the whole world can watch that they are all dance and no music. And in the Gulf, there are definitely some mixed messages that come from different capitals, but real centers of power among those Gulf allies are saying publicly that they are on the American side of this longer term. And ultimately, they don't think that the Iranians are free of responsibility in all this. Ultimately, Iran has been a profound threat to them, and they've seen everything that's been tried in recent decades as being insufficient to the task. They don't like the ugliness of the missiles coming their way. They would rather have greater certainty, greater access, but they see this as having been a necessary issue to address, whether they liked the timing or the pre-operation consultation. Also, not everyone who is consulted says so publicly.
Steve, there's also a question. You mentioned that you think that it aligns the United States in a better position geopolitically, even with respect to China. There are a number of people who say that China is trying to actually reinforce its influence in the Middle East as the major oil buyer from the region, and that you're seeing actually some of the oil traded in the region from Iran transacted in renminbi. What do you make of that, the idea that China has actually gained leverage during this process?
Well, it's, I think, very incidental leverage, and it's really exposed two huge vulnerabilities for China that haven't really factored into a lot of people's long-term assessments of China's power and influence. One is China is entirely dependent on being an export-led economy. There has been no transition to a consumption economy in China, and where they have to export is to the world's largest consumer market, which is the United States. That's a huge complication for them. The other part is that China remains hugely dependent on imported fossil fuel. There's been a lot of chatter about them racing ahead on solar, and maybe they are, but when it comes to being a cutting-edge, AI-driven export tech economy, it's just impossible for them to even function at a survivable rate without that dependence on imported energy, and especially fossil fuel. And so their risks have gone significantly up. We've had exposure on rare earths. They have much bigger vulnerabilities. Really, both have to address those, but America's options are getting gradually better. I think China's options are not.
Steve, it's good to hear from you. Appreciate your reaction and anticipation of these talks if they happen in the next 24 hours. Thank you, sir. Steve Yates there of the Heritage Foundation. Just as we're wrapping up those thoughts, we got some comments from the President of the United States out on social media. Not on the US and Iran, not on those talks, but on Apple and Tim Cook.
Yep, that he's an incredible guy. He basically is talking about how he's a huge fan of Tim Cook. He even makes a joke, which I think a lot of us think about when we think of the president and Tim Cook. When I got the call, I said, wow, it's Tim Apple. And then in the parentheses, the president says Cook, calling. How big is that? He said he was very impressed with myself, the CEO of Apple, basically calling, helping him with problems that only he could do, and basically saying if they had to hire a consultant, it would have cost Apple millions, basically saying he saved the company millions of dollars. He says he's an incredible guy, and I think this is pretty much a sign-off to Tim Cook. But, of course, this is why Apple is keeping Tim Cook around as executive chairman. If you're a new incoming CEO that ran hardware, you're an engineer, is this really the portfolio you want to deal with on day one?
The ambassador keeps his job at the top of Apple.
And frankly, I'm sure everyone is happy because if you think about it, that's not a small distraction if you're at the top of one of these tech companies.
That stock just a little bit softer this morning by a third of 1%. Let's get you an update on news worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. 3 ships, including an Iranian vessel, crossing the Strait of Hormuz, even as the U.S. and Iranian blockades remain in place. The Iranian vessel stopped signaling its location after moving into the Gulf of Oman. Around 800 vessels remain stuck in the Persian Gulf. MAGA Inc. is building a nearly $350 million war chest ahead of the midterm elections, according to federal filings. The super PAC raised over $35 million just last month, fueled by donations from roofing supply billionaire Diane Hendricks and tech investors Mark Andreessen and Ben Horowitz. And Amazon is investing $5 billion in Anthropic and may inject $20 billion more over time. The partnership will see Anthropic, maker of the Claude chatbot, spend more than $100 billion over the next 10 years on Amazon cloud services and AI chips. That's your Bloomberg brief. John?
Yahara, thank you. More from Yahara in about 30 minutes. Up next on the program, Kevin Warsh setting the tone.
There's a potential for Kevin Warsh to come in and kind of set the tone about how he's going to smooth out this leadership transition. It's really important to help us understand how does Kevin Warsh think about rates policy.
In just a moment, we'll catch up with Andrew Sheets of Morgan Stanley, live from New York City. You're watching Bloomberg TV. Live from New York City, welcome to the program. Under surveillance this morning, Kevin Warsh setting the tone.
There's a potential for Kevin Warsh to come in and kind of set the tone about how he's going to smooth out this leadership transition, because right now it's quite chaotic. It's a bit of an enigma what his reaction function is. It's really important to help us understand how does Kevin Warsh think about rates policy. He's had very hawkish positions in the past, and now he has very dovish positions.
So here's the latest this morning. Fed Chair nominee Kevin Warsh set to face a grilling on Capitol Hill at his confirmation hearing. Warsh writing in prepared remarks, quote, "I believe a reform-oriented Federal Reserve can make a real difference to the American people." Here's the big line. Inflation is a choice, and the Fed must take responsibility. Joining us now is Andrew Sheets of Morgan Stanley. Andrew, good morning. What kind of change are you expecting at the top of the Federal Reserve when ultimately the handover takes place?
Yeah, thanks. Good morning. It's great to be here. So we do think that Warsh will embrace a view that I think is backed by a certain level of initial data that AI is boosting productivity, and that productivity boost is going to be disinflationary and help relieve inflationary pressures in the economy. And I think this is a view that's also very close to a Silicon Valley tech-focused view of the world, which I think helps form his worldview. Now, the challenge is that the data that the Fed is inheriting is still above the Fed's target. Core PCE year over year is 3%. It's been well over the Fed's target for a considerable period of time. And so it's not just about what the new Fed chair will think, it's about what the rest of the committee will think, and it's about convincing that committee of that story. And so, again, I think if we think about this data that's coming in, the data in the second half of the year is going to be incredibly important. That's going to be data that's harder to push off to tariffs, to push off to one-off other things.
Some officials have already weighed in on that theme. Do they agree with him?
I think there's a lot of skepticism. I think there's a lot of skepticism that inflation is really coming down. I think the Fed's been surprised this year about the persistence of core inflation. And I think so the next incoming data, the next several incoming data reports, remember we're lapping roughly the year anniversary of Liberation Day and the tariff impact that we know has had an upward pressure on core goods inflation. And so as I think you get into the next several data prints, which are arguably going to be cleaner prints without the same tariff impact year over year, as you get into the second half of the year where some of those factors should be easing, if it does ease, I think that makes the new Fed chair's case a little easier if they're trying to convince the rest of the board that inflation is coming down. If it doesn't, then I think it's a much harder hill to climb.
How much is the market just completely ignoring the statements that we got that were leaked from Kevin Warsh ahead of this testimony, considering this sounds like the hawkish person who he was before he was nominated by President Trump? And frankly, this sounds like someone who'd be even willing to hike rates in the face of higher inflation.
Yeah, I think the market is willing to look through that. I think the market believes that ultimately the Fed will want to normalize policy if inflation is coming down. I think the market can also look at inflation break-evens and say those have been relatively stable in the face of some of this other higher core inflation pressure. Again, that should overall encourage a gradual normalization of policy. But I think as we get into these hearings, as we get more statements, there is going to be a lot of important information that comes out. But again, I think the market is still believing that this is ultimately a potential Fed chair who ultimately wants to lower interest rates and sees more disinflationary pressure on the economy.
How much is the rally and frankly, the strength in credit predicated on that assumption?
Well, I do think that you've had a challenge where the market has eased financial conditions again as this rally has taken place, right? Equities are higher, credit is tighter. Yields are lower. And so in some level, some of the argument for easing into some of these growth shocks from a potential extended energy risk, well, those go away if financial conditions have already eased. But I also think for credit, whether or not the Fed stays on hold, cuts rates 25 or 50, I actually think that's a relatively minor issue. I think the more important thing for credit is one, whether or not the economy holds up. If there's a recession, it's quite bad. But also just the level of supply. I mean, the levels of AI financing continue to surprise what we thought were going to be very large levels 6 months ago. 6 months ago, or over the last 6 months, our estimates for AI-related spending have increased $630 billion. Increased that much. So that's an enormous amount of spending. That's an enormous amount of spending that needs to be financed. And that's a big issue that the credit markets are having to deal with, is just a lot of supply coming from often high-quality issuers, but it needs to get financed, and that can put some pressure pushing spreads wider.
Andrew, when it comes to Kevin Warsh, Senator John Kennedy says he'll ultimately be confirmed in what decade? I don't know. Do you have a date penciled in on when potentially we actually will get a confirmation of Kevin Warsh?
We do not, so we have to play that by ear. Again, I think that for the moment, the market, I think, can take some comfort in the idea that the market's expecting the Fed to be on hold anyway. So, the lack of a changeover maybe matters a little bit less as we're in this intermediate period. I think where it gets more awkward is if we have a significantly higher inflation print. If inflation does not moderate in the second half of the year, does that complicate this question more? Or if we get an extension of the crisis and there's this question of, does the Fed feel confident enough to react? But again, I think for the moment that question of if it takes a little bit longer is one that the market can deal with.
Andrew Sheets of Morgan Stanley. Andrew, good to see you here in New York. Thank you, sir, for dropping by. What happens after May 15th? Nobody knows.
And frankly, right now, nobody cares, the less you know.
Stocks near all-time highs. Equities up again by 0.4% this morning. Up next, we'll catch up with Savita Subramanian of Bank of America, Stephen Cook of the Council on Foreign Relations, Angelo Zino of CFRA, and Tony Rodriguez of Nuveen from New York City. The second hour of Bloomberg Surveillance just around the corner.
The data still feels like the economy is very strong.
The consumer has remained intact.
It's very clear there's a lot of resilience in the economy.
There is absolutely zero room for consumers to be able to absorb higher prices.
It's not all puppy dogs and rainbows out there.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures bouncing back, heading back towards all-time highs on the S&P 500, following snapping a 5-day winning run on the S&P 500 yesterday. Likewise on the Nasdaq, snapping a 13-day winning stretch this morning, up by 0.5, or the Russell up by 0.3. Going into this a little bit later this morning, retail sales at 8:30 Eastern Time. After the close, we'll hear from United Airlines somewhere in between at 10 a.m. Eastern Time. A little bit later this morning, Kevin Warsh, testimony on Capitol Hill.
Yeah, how much will it matter? I mean, we've talked about how this is going to be political theater, but there also are comments that you've mentioned were leaked to Politico from Kevin Warsh, talking about the importance of wrangling inflation back in the bottle, and talking about how this is a choice by the Federal Reserve. This sounds like the hawkish Kevin Warsh that everyone has loved and known for many, many years. So would the real Kevin Warsh please stand up?
It also sounds like shots fired at Team Transitory and Jay Powell. Inflation is a choice. The Fed must take responsibility for it, something that the Fed really hasn't done, given the fact that they're cutting interest rates when inflation has been closer to 3% than 2%. He also talks about how it does grievous harm to the citizens, especially those that are least well off. Another interesting moment in this testimony: I do not believe the operational independence of monetary policy is particularly threatened when elected officials, i.e. presidents, state their views on interest rates, and saying central banks need to be strong enough to listen to everyone and have a variety of opinions.
There's plenty of nuggets here. I believe that monetary policy independence is earned. I imagine there might be some pushback on the committee a little bit later this morning.
Especially given the fact that right now people are somewhat skeptical, although that pushback is not what the market wants to hear. Ultimately, people will just say, la, 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 we don't really care. This is the classic kind of line of questioning. Post it on your Instagram and we'll tune it out. The real line of questioning is, what's your threshold to cut rates again? The other question that people have is, what is some sort of cooperation with the Treasury Department? What does that look like, given the fact that a closer tie between the two departments could end up with the Treasury having a say in the Fed's balance sheet? There are a whole host of questions that are lined up for this afternoon that we probably will not hear about.
I'd like a deeper understanding of his reaction function. I want to understand of his mood, his idea, his view of things has changed since the war in Iran. 2, 3. He's got this whole thesis that because of technological developments that ultimately they'll be able to reduce interest rates. I'd like to hear more about that. Can he get the committee to come alongside him? Those are all things we'd like to hear about. You're not going to hear much about them later on this morning based on the views of so many people that have already come on this program.
It'll probably just be a question about, are you Trump's man? Are you going to do whatever he says? And he's going to say no. And they're going to say, are you sure? Well, how about this? And he's going to say no. And then it's going to be...
Sir, you're worth so much money.
Oh, yeah, that's
true.
You're
so rich, you're so
wealthy.
Let's
go through this. Yes, exactly.
Can we really trust you to set policy for the country when we've got all this money?
All right.
You know exactly how this is going to go.
I know, but please, ask some questions. I keep hoping that we're going to get somebody sneaking in there.
Well, Senator McCormick, obviously, former Wall Street executive, I imagine he is going to dial into some of the financials and also macroeconomics when it comes to this hearing.
I'm pleased you're hopeful. I share some of that hope. I hope you're not wrong.
Someone's got to do it.
My bar for Washington's like rock bottom.
The less I know.
It's just
I'm a little more hopeful than you, maybe, then.
Okay. All right. 10 a.m. Eastern Time. You can tune in for yourself. Coming up this hour, Subramanian of Bank of America as the Nasdaq snaps a 13-day winning run. Angelo Zino of CFRA as Apple sets its succession plans in motion. As Stephen Cook of the Council on Foreign Relations as President Trump signals a ceasefire extension is unlikely. We begin this hour with stocks holding near all-time highs. Subramanian of Bank of America writing, we see a big proportion of haves in financials and a good chunk of haves in tech and see both sectors as rife with idiosyncratic opportunity. Savita joins us now for more. Savita, good morning. Good to see you.
Good morning.
The mood on Wall Street, buy the dips. I've seen this across the board. I've seen it from a range of banks that every time you get a bit of weakness, you should buy it. Is that your approach to this moment?
Not necessarily. I think you can use this opportunity to buy certain stocks. And you mentioned tech and financials. Those are areas where we think a lot of stocks have been sort of summarily rejected because of geopolitical risk and haven't necessarily come back. I think that for the index overall, I worry because there are some supply shocks in terms of equity coming up. We've got a lot of private capital sitting on the sidelines waiting to IPO, especially in technology, which is the biggest chunk of the S&P 500 of the U.S. equity market. I also think that the direction from here is really what's the next positive surprise versus negative surprise. And, we're done with that whole geopolitical thing, it seems, but are we? I think that's the question. And then on top of that, we're starting to see the potential impact of higher oil prices in consumer companies' forward guidance. So I think the risk is the impact of oil shocks takes a while to play through. So far, what we've seen is that consumers are spending more on gas and oil, but the actual hit to discretionary and, kind of the rest of the stack could be 3 quarters out. That's what we found in our data. So I think this is a moment where you have to think about what are the positive versus negative surprises. And I guess I don't see as much likelihood of positive surprises in these big bellwether sectors like tech, even industrials. I think industrials is now trading at a really lofty multiple. It's pretty crowded. Sure, tons of tailwinds, CapEx alive and well, everything is hunky-dory. Defense, you've got oil plays in the sector. But I do think that, there are areas of the market that were basically bought to hedge against geopolitical risk, industrials being the classic case. It's interesting. So I'll give you a little anecdote.
Sure.
I was marketing in Europe a couple of weeks ago, and as you know, it's hard for global investors to buy fossil fuels. So I think that, there is this frustration because you can't buy oil stocks. Oil is surging. So I think there was this sort of industrials closet energy demand, because if you look at the correlation of industrials companies, they act like energy. A lot of them look like energy and act like energy stocks, but aren't in the energy sector. So they're a good way to get exposure to a commodities upcycle without actually having to buy the energy companies. Sorry,
yes.
long.
Well, let's unpack some of it. So the headwinds and the threat at the index level.
Yes.
You noted a couple. IPOs being one. The lagged effect from higher oil prices being 2. There's a third from tracking your research that you didn't mention, and that was buybacks.
Yes,
How are
yes,
buybacks
thank
changing? And why is that becoming a bigger headwind to this index?
So, there's a lot more claims on capital for companies. Thank you for remembering that for me. Buybacks are a big deal. I think that what we're seeing now, they're still happening. And in certain sectors like financials and tech, you're seeing really sustained levels of contribution to earnings per share from buybacks. But for other sectors, we are starting to see a bit of a slowdown. And, I think that what we're seeing right now in that mega cap tech complex suggests cost cutting. And you're seeing this with layoffs. Buybacks are slowing down. There's a lot more money earmarked for CapEx, like kind of mandatory CapEx. So I think that's the problem right now is you've got higher interest rates. You've got this environment where the cost of capital has increased pretty aggressively, could go up even further for IG investment grade debt in some of these tech areas where you're seeing supply issuance, as we were talking about. So I think this is in a moment where you really want to think hard about what companies are doing with their capital. Buy the ones that are getting the CapEx, not spending the CapEx, and buy the companies that are continuing to have this share buyback or cash return focus, because that is starting to wane rather than wax.
It feels like it's sort of a good moment for Tim Cook to step aside as the share buyback. The king of share buybacks is stepping down at a time when maybe that's not going to be as much of a driver. You pair the potential negative technical with the positive that everyone who comes on the show keeps talking about, which is earnings. They've beat the upside tremendously.
Yeah. Earnings are great.
Why
Earnings
is that not enough for you?
Earnings are not the problem. Earnings are great. So far, so good. Q1 coming in strong, more beats than misses by a big margin. I think, though, when you think about what markets react to, it's not necessarily actual earnings, it's a surprise element. So, what we've found is that during years of really strong earnings and strong GDP growth, the market actually turns in sort of, average returns. It's not necessarily the greatest year for the market. The markets generally anticipate these recoveries. And now the question is, are earnings going to surprise as much as they did last year or the year before? I don't know. I think it's harder at this point.
What do you have to see next week from the big tech players to potentially change your view and suddenly upgrade to 7,600 and say, you know what, technicals be damned. It's going to be a great year.
Right. Buy the dips. Look, I think that tech is still, the future, right? And it's some of these companies belong as core holdings in our portfolios. But I think that the idea that all of the Magnificent Seven can go to infinity is hard to imagine. There are going to be winners and losers. And, I guess I want to see how long it takes to really monetize AI. Because if you look at the telecom bubble back in the 90s, 2000s, obviously very different, much more extreme valuations, a lot more leverage. But during that build-out cycle, the companies couldn't fund themselves and last long enough to enjoy the fruits of their labor, which is all that fiber they laid in the ground that we are using now, but they're not around to actually recoup the benefits. So I think the longer this build-out cycle takes, then the longer it takes to actually monetize these efficiency tools, the more at risk some of these companies are, especially the ones that are having to lever up to extend that CapEx machine.
Something that struck me in your research was you say there's better low-income consumer for affordability measures. At the same time, what I'm seeing in polling is that the lower-income consumer is struggling right now with higher gasoline
With higher
prices.
gas and oil, yeah. So, I think that's the one kind of dark spot. But when you think about the lower-income consumer in general, I think what we've seen outside of energy is a slowdown in some of the inflationary measures for, food at home versus food away from home, like things that are skewed more to that lower income wallet. I think, one of the benefits as we move towards the midterm elections is if we start to see a renewed focus on this affordability agenda, and, that could get the wheels turning again for the consumer. But I think, we were surprised by this sort of inflation shock rather than a disinflation affordability shock at the beginning of the year. So I think that's the spanner in the works.
Yeah, how we started the year and how we kicked off the month of March were very, very different. Let's put it that way. Savita, good to see you. Always enjoy your research. Thank you. Savita Subramanian there of Bank of America. The president weighed in just moments ago on social media. Just one line, enough to pull the equity market back just a little bit. And that one line read as follows: Iran has violated the ceasefire numerous times.
So this is obviously going to throw some cold water on the potential for those talks tomorrow. Is the president basically trying to prepare everyone that because he thinks they violated the ceasefire, maybe those talks won't go ahead to Islamabad? Remember, neither delegation has left their home countries yet to go for those talks. When he talks about Iran violating the ceasefire, I imagine he means when they pretty much said the strait was open, then it was closed. A little bit of a difference between what the Iranian politicos are saying versus the IRGC. What Iran is saying right now is that the United States has violated the ceasefire, especially since they went onto and held captive an Iranian vessel. So right now it looks like potentially a little bit more tension between this relationship, as a lot of people were hoping for that off-ramp.
We'll keep tracking those headlines for you throughout this morning. Let's get you an update on stories worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. We start there. President Donald Trump signaling he is unlikely to extend a ceasefire with Iran that's set to expire on Wednesday. The president telling Bloomberg he is, quote, not going to be rushed into making a bad deal. Trump posting in the last few minutes, as you said, that Iran has violated the ceasefire numerous times. We are seeing United Health shares rising 7% in the pre-market after posting first quarter profit that blew past Wall Street estimates and boosting its full year outlook. The figures are a sign the health giant is rebuilding credibility with investors. Its CFO saying the increased outlook is prudent. And President Trump also weighing in on Apple's succession plans this morning. In a post on Truth Social, the president complimented the way Cook has run the company. He called his career amazing and wrote that Cook will, quote, go on and continue to do great work for Apple. Tim Cook is an incredible guy, he says. That's your Bloomberg Brief. John.
Yahira, thank you. I have to check myself every time I talk about Apple. How close are you to saying Tim Apple?
All the time.
All the time.
And Trump actually makes a joke of it.
It's true.
In a moment of self-awareness, the president makes a joke of it because he knows that clip gets played a lot. Tim Apple calling Cook.
Up next on the program, succeeding Apple's Tim Cook.
The suggestion that only Tim Cook is the CEO to run this company is crazy. You clearly need someone that can move forward on a lot of the product development.
Shout out to Walter Piecyk of LightShed. We'll catch up with him a little bit later this morning following that conversation 12 months ago. Angela Zino of CFRA joins us next. Equities on the S&P 500 firmer here by 1/3%, bouncing back up by 0.4 on the Nasdaq. Moments ago, the president with just one line on Iran, saying that Iran has violated the ceasefire numerous times. We were hoping for talks a little bit later. Unsure if those talks are even taking place.
Yeah, the talks were supposed to happen today, and now they're going to be happening tomorrow. There's an extra day for the ceasefire. This just adds a new wrinkle, and frankly, it's notable to me that the market, again, is sort of like, okay, not sure what to make of that, so maybe we'll just move on.
Small dip and then shaking it off. Small dip on Apple stock as well in the pre-market. I'm sure you want to know where that's trading. Slightly softer throughout this morning by a few tenths of 1%. Under surveillance this morning, succeeding Apple's Tim Cook. The latest this morning as follows. Cook preparing to step down following a record-setting 15-year tenure, handing the reins to hardware boss John Ternus on September 1st. With the latest, Bloomberg's Ed Ludlow joins us for more. Morning, Ed. Just walk us through the next steps here, the timeline, and how this is going to work.
Yeah, I mean, through September 1st, that would be almost exactly 15 years since Tim Cook took the reins as CEO, which was August 2011. I think what's so interesting about all the coverage is people forget Tim Cook joined Apple in 1998 and was COO in 2005. So his kind of relationship with the company extends beyond that. The September 1st point is interesting because you have WWDC, which is the company's annual developers conference over the early summer. And, you know, this time around, especially as it relates to the stock story, everyone's expectation is they will finally say something about AI and how AI is going to be meaningfully useful through an iPhone handset. And then when you get to September, you have the seasonal release of the latest generations of hardware. So, you know, the backward-looking data is amazing, right, John? Profit growth of 700% in that period with Tim Cook as CEO. They finished the last fiscal year with $112 billion of net income. But the current data and forward-looking data is that top-line growth at least has really plateaued. And so Tim Cook is going to continue to talk with policymakers, government, focus on supply chain in an executive chairman role. But what's so detailed in Bloomberg's reporting, John Ternus is a good operator, right, politically and literally from a hardware engineering standpoint. And so he's seen as both the continuity candidate, but also someone that might be a bit more Steve Jobs in mold, have conviction to make calls, not just to proceed with the big bets and big swings, but cancel those projects which don't go as well. And so that really is the focus of what everyone's digesting this morning.
Ed, thank you, sir. Stay close. We'll catch up with you again, no doubt, later on this morning. Angelo Zino of CFRA maintaining his buy rating on Apple, writing, we view this well-orchestrated succession as neutral to modestly positive. Angelo joins us now for more. Angelo, I just get the feeling, and whenever I get this feeling, I'm slightly uncomfortable, that the PR is in full flow this morning, that people are worried about offending Tim Cook because he's had such a great run for 15 years. Do you sense this was a choice, or was he getting ahead of potential pressure later this year to step aside?
Well, you know, I think the writing was on the wall with Tim Cook at some point to have stepped down, right? You know, it was something that had been talked about for a couple of years at this point in time. When you look at his age at about 65 or so, I mean, it was going to happen sooner or later. So timing-wise, I do think this is a very interesting time. I think potentially the right time. It did come sooner than we anticipated. We actually kind of thought he would maybe sit this out or, you know, stay as CEO through, you know, the Trump administration stay. But that being said, you kind of look at, you know, where Apple is today and what they're pivoting into. And this is a critical year in terms of the shift to AI, something they've missed the boat out here over the last 2 years on. And you kind of look at the shift to foldables here later this year. You know, I think it's the right move to hire a product guy. I think it's also the right move to, you know, finally pivot away from Tim Cook. Again, it had to happen at some point in time. You know, is Apple somehow smoothing this out? Potentially, but you know, nonetheless, I think it's the right time for him.
Angelo, you said that Apple missed the boat when it comes to AI. Is that the right way to look at this, or is this the classic Apple playbook where they wait for others to start something, try to perfect it, and then roll out a more complete product after the fact?
Yeah, I think you probably put it better, to be honest with you. And, you know, I think this is a wait and see for Apple as far as the AI story is concerned. I do believe when you think about how Apple is going to find success here in the future, clearly they've said we're not going to chase the LLM strategy, and many people have applauded that. You look at the multiple of Apple stock in the high 20s. Most investors are happy with that move. Clearly, the pivot here and their success is going to be dictated on AI at the edge, at the device side of things. And again, the moving to John Ternus here partly makes sense because of that pivot. When you look here over the next 10 to 15 years, which we think is going to be the time span you're looking at John Ternus staying at Apple. You look forward to that point in time. Clearly, Apple's success is going to be dictated on that AI strategy and rolling out the right products in an AI-driven world.
Angela, do you think that investors will be patient if we hear from Apple that they're planning to boost their CapEx significantly as a result of their effort to try to roll something out in the AI space?
Well, I think if they choose to do that, it's going to be dictated on how they articulate it, where that CapEx gets spent, and what have you. So I think there's a lot of moving parts as far as the spending plans goes going forward. If I were John Ternus, and I think when you kind of look at Apple here, I don't think they're going to rock the boat very much here, at least initially, as John Ternus takes over. I mean, one thing that we saw with Tim Cook when he took over from Steve Jobs is he was giving the keys to a very nice car. And when you kind of look at here and what John Ternus is taking over from Tim Cook, I do think that the seeds are put in place here where clearly they've got an AI strategy that I think they're going to be able to finally articulate on. They are going to be leveraging Alphabet as well as others out there here over the next couple of years. And again, as you kind of shift to probably new product devices on the horizon, finally shifting towards foldables, I think that you've got a good enough strategy in place. And the great thing here is Tim Cook does stay on as chairman. So he's going to be able to handle a lot of the dirty work out there on the policy side. And I think that's a critical part of the story here.
One executive speaking candidly to our colleague said that Ternus is a Tim Jr. What points of the next few years would you actually want him to see him be different, though, than Tim Cook?
I think initially you kind of want him to be, a lot like Tim Cook in terms of execution, operation, and what have you. At some point in time, you're going to have to see John Ternus make some of the tough decisions out there and be willing to go out on the risk curve. And again, because we are talking about a more AI-driven world, things are going to move a lot faster here over the next couple of years. And if Apple's not innovating, if they're not looking to be on the iPhone at this point in time, clearly they're going to be stuck in the mud here long term and be a low growth a low growth revenue driver. So at some point in time, let's call it here over the next 2 to 3 years, once Ternus gets his feet in there, you're going to want to see him go out on the risk curve. And again, it's going to have to be a lot more than just iPhones.
Angelo, it's good to get your view. Thank you, sir. Angelo Zino there of CFRA. I give Tim Cook a lot of credit for stepping aside. And I don't want to make too much of a single day's move, but when you see those big gaps lower because a CEO has left and something's gone wrong with succession planning, I think the fact you see such a muted move in the stock is credit to Tim Cook for taking a succession planning very, very seriously. That's what you expect. That's what you should see when a CEO steps aside.
Especially because John Ternus was pegged as the guy months ago. I mean, people have been expecting this to be the successor. And so, frankly, they're prepared for it. And frankly, they're kind of welcoming it, given that there isn't much more of a reaction in the stock market.
We'll have more on that story for you a little bit later on this morning. Coming up next, we'll catch up with Stephen Cook of the Council on Foreign Relations as the Iran ceasefire deadline looms. And we still don't know if we'll have talks between the US and Iran and at what level. Plus, Danny's going to be back. She's got your morning movers. We're going to look at Apple, edging slightly lower. We're down by not even 0.2% following the announcement of Tim Cook's successor. From New York City this morning, good morning. You're watching Bloomberg TV. Stocks bouncing this morning. Very muted declines in yesterday's session. Keith Lerner over at Truist. We view weakness as an opportunity. How many times you heard that? Max Kettner, HSBC. These are exactly the sorts of dips one will have to use very quickly. You'll have to be fast. Here we are. Here's the bounce, up by 0.4% on the S&P, on the Nasdaq 100, up by 0.5%. The appetite to buy this equity market, stunning.
Yeah, and it's sudden. And I think that that's really the point that a lot of people keep taking home, that this rally has been absolutely a huge whipsaw and kind of, if you blink, you miss it. I love that JP Morgan just raised their S&P 500 year-end forecast to 7,600 after downgrading it to 7,200 last month in the wake of what we saw with respect to the war in Iran. It highlights how quickly this is moving and how people can't really get a handle on it. And right now, people are saying, okay, that geopolitical stuff, as Savita Subramanian was saying, is probably over. Let's just focus on the fact that tech earnings look great and that tech will power us to the moon.
I said it when he did it. Venu, over at Barclays, raising his price target in the middle of the war. He had to respect it at the time. I had no idea how it would work out, but so far, so good as we get deeper into April.
And when we talked more about that call, we said, well, what happens if the war continues forever? And they said, well, ultimately, that's going to just eradicate this view. We're wrong. And the war has continued, and they're still right, because ultimately that is the direction of travel. So at what point do we get some sort of right-sizing and understandings? You know, the whole idea of the less you know is really kind of getting to me today.
We pushed back hard on him because it felt unorthodox to come on in the middle of the war and raise your price target. And he said if he's wrong, he'd come back on the show. And guess what? He's been right. Cheers to him.
Equity futures this morning, again up 0.4% in the bond market. Yields just unchanged. Going into Kevin Warsh's testimony later on this morning on Capitol Hill in front of the Senate Banking Committee at 10 a.m. Eastern Time. We've got yields doing absolutely nothing. 425 on 10s, 2s at 373, and 2s just anchored around Fed funds. And the idea this Fed is going nowhere fast.
Because that's what they've told us time and time again, even the more dovish members. I'm thinking of Chris Waller, the Fed governor, who had previously supported a rate cut because of weakness in the jobs market, reiterating his concern about the jobs market, but saying ultimately there isn't justification to cut rates with inflation inflecting higher on the heels of this war.
Brent crude this morning, 95, WTI 89, just slightly softer. We're negative by, let's call it 0.5% going into potential, I stress potential talks between the US and Iran in the next 24 hours. That's the price action this morning. Cross asset. Let's get you some single names, some morning movers. Danny has more. Hey, Danny.
Hey, John. It's the top corporate story over the past 12 hours. Tim Cook stepping aside to executive chairman and John Ternus, the hardware chief, taking over. This ends Tim Cook's tenure where he increased the market cap by tenfold. Not a lot of action. In fact, the president of the United States putting on Truth Social moments ago a very long post about Tim Cook, praising him, basically saying he's an incredible guy. Dan Ives of Wedbush basically saying that the timing creates questions. It could make sense, but there are big shoes to fill. In some earnings news, we heard from United Health, and this stock had really been suffering. It was only in January that they increased what they thought would be their loss for the year. Instead, we get the widest beat, the widest margin of a beat for United Health in 5 years. They also increased their expectations for the entirety of the year. They're able to bring costs in. That beats a key metric, so shares surging this morning up by 7%. Finally, GE Aerospace also reporting earnings. Now, they do have to contend, this jet maker, they have to contend with the war in Iran, but still travel demand is very healthy, which helped the engine maker. At the same time, they kept their guidance for the year, but guided towards the high end of the range, and also guided that they expect oil prices to remain elevated. Those shares up 1.6%, John.
Danny, thank you. Thank you for the update. More from Danny in the next hour. On our radar this morning, President Donald Trump saying he's unlikely to extend the Iran truce that's set to expire tomorrow. The president posting on Truth Social earlier this morning that Iran has violated the ceasefire numerous times. Elsewhere, a historic shift at Apple. CEO Tim Cook stepping down in September after a 15-year run. The hardware chief, John Ternus, taking over. Cook transitioning to executive chairman. And finally, Amazon doubling down on AI, pouring an additional $5 billion into Anthropic. The deal securing a massive 10-year partnership for Amazon's own cloud services and chips. Turning back to the Middle East, Vice President J.D. Vance expected to travel to Pakistan as doubts remain over whether or not another round of peace talks between the US and Iran will actually take place. With the latest, Bloomberg's Tyler Kendall. Morning, Tyler.
Hey, John, good morning. Well, as you mentioned, President Trump says that he's unlikely to extend that deadline, and the White House is now threatening further escalation, including targeting Iranian civilian infrastructure if a deal is not made in time. Though we're getting a little bit more insight into the negotiating tactics, if you will, as a White House official outlines to Bloomberg News that President Trump's varying comments should be seen as creating strategic ambiguity that the U.S. can use in any potential negotiations. Though, of course, that's not the only ambiguity be amid this uncertainty about whether or not Iran will send a delegation to Pakistan, as the vice president, alongside Special Envoy Steve Witkoff and the president's son-in-law, Jared Kushner, are expected to depart later today, though at this point they haven't taken off yet. And we got this post from President Trump within the last hour saying that Iran has violated the ceasefire, which is raising those doubts further. Now, our reporting has indicated that leadership within the IRGC is pushing for a tougher negotiating stance compared to, say, less ideological figures such as Iran's foreign minister or its parliament speaker, who seem to be more amenable to a potential deal with Washington. However, John, perhaps universal among Iranian officials is that we keep hearing that the country does not want to negotiate while the U.S. blockade is still in place. President Trump indicated yesterday that it's not going anywhere until a deal is signed. And while the waterway still remains virtually closed, we can say that data analyzed by Bloomberg News shows that at least 3 vessels appeared to have made it through the strait overnight.
Tyler Kendall with the latest. Tyler, thank you. More from Tyler throughout this morning as we anticipate potential talks between the two sides. Stephen Cook of the Council on Foreign Relations writing the parties are very far apart on the most important issues. The question is whether the president has the patience to continue to squeeze Iran or if he is willing to escalate. Stephen joins us now for more. Stephen, welcome to the show. Good to catch up. Important day. Let's see what the next 24 hours holds. But ultimately, an important question for you. Is Iran willing to have regime collapse? And is the US willing to maintain maximum pressure and take the consequences in the energy market as they come?
Well, the regime believes that it's winning and that it has weathered the worst of the American and Israeli assault and come through it with the IRGC completely intact. So they are, at least the leadership of the IRGC, which is Ahmed Vahidi, who is essentially running the country, wants to take a tougher position in negotiations. The president is variable, as Tyler Kendall's report suggested. He wants to have a deal. But the Iranians have violated the ceasefire. He's going to keep the blockade on the strait for as long as he can. I would expect that the president does not want to escalate and is looking for some opening here for the Iranians to agree to some sort of extension of the ceasefire. But again, the Iranians are driving a very hard bargain because they believe they're winning.
Does the IRGC give the green light for the talks to go ahead tomorrow?
Well, again, Ahmed Vahidi, who is the head of the IRGC, who is quite a hardliner, will give the go-ahead for talks as long as Iran's demands are maximal. There seems to be somewhat of a split between two figures within the IRGC, the parliament speaker, Ghalibaf, and Vahidi, over the way to pursue Iran's interests here. Ghalibaf is suggested to be somewhat more flexible, whereas Vahidi is the hardest of the hardline and would rather Iranians eat dust than capitulate to the United States.
He did seem more flexible until last night. Ghalibaf tweeted this: "We do not accept negotiations under the shadow of threats, and in the past 2 weeks we have prepared to reveal new cards in the battlefield." Is the IRGC prepared to escalate?
Absolutely. I think that the IRGC would go back to the battlefield. Once again, they have felt that despite taking a beating, they have approached this conflict in an asymmetric way by targeting America's partners, by targeting the global economy, by targeting the Strait of Hormuz, which they now have at least partial control over, which is all accrued to their benefit. And so the IRGC, highly ideological, would continue this fight. They have said that they have nerves of steel and that they will not capitulate under threats of the United States.
What would the United Arab Emirates like to see, given the fact that they're the closest neighbor to Iran and have arguably suffered the greatest amount of damage?
Indeed, the Emiratis have taken more fire than even the Israelis. But the Emiratis have said that they are going to draw closer to the United States. Their rapprochement with Iran, which was happening for a couple of years before this war began, is now over. And they would like to see the strait opened. They volunteered to be involved in any kind of military operation to reopen the strait, and have in fact engaged in military operations against the Iranians in response to Iran's strikes on the UAE. So the Emiratis are taking a pretty tough stand here. They are worried over the long term about what this might do to their development model. But that's why they are taking a relatively tough stance. And Emirati officials have said that they will draw closer to the United States as a result.
Last week, we talked about cognitive dissonance, the fact that when we talk to policymakers, they don't foresee an easy end to this anytime soon. And when you speak to people in markets, they're done with it. They don't want to hear about it. They've moved on. When it comes to jet fuel, when it comes to tangible assets that potentially are running out in places like Europe, do you have a sense of your likelihood or your categorization of the likelihood of jet fuel running out in certain places and suddenly global flights getting canceled as a result of this ongoing conflict?
Yeah, it's very interesting to see the markets, and you all know better about that than I do. But there is, when you talk to energy analysts, there's a difference between the markets and the molecules, and that there is that countries that are producing oil and other hydrocarbons that are critical to the running of the global economy are having to shut in, and that the oil is starting to become scarce. So we might see in places like the UK and others the rationing of jet fuel. I wonder if market actors will then wake up to what a serious crisis this really is.
Not seeing that right now. Stephen, it's good to hear from you. Thank you, sir. Stephen Cook there of the Council on Foreign Relations. Airlines up nicely this month. I think Delta's up by 7%. We'll hear from United later on this afternoon. Discretionary names up by double digits on the S&P 500 so far in April. Energy stocks down double digits so far in April.
Yeah, all of this, though, with Alaska Airlines pulling their full-year guidance, saying oil prices just are too much of a wild card for them. JetBlue saying to their shareholders and their employees, we're not going to have to file bankruptcy this year. It's not a good thing when you have to tell people you're not filing for bankruptcy.
Bar's pretty low for that company right now, right?
It is a difficult time for the regional players and for the ones that aren't very large. And so you do wonder at what point this becomes a larger story, or is this just going to be a consolidation, winner takes all type of thing?
Futures session highs up by 0.5% on the S&P. With an update on stories worldwide with your Bloomberg brief, Yahira has more. Hey, Yahira.
Hi, John. 3 ships, including an Iranian vessel, crossing the Strait of Hormuz, even as the U.S. and Iranian blockades remain in place. The Iranian vessel stopped signaling its location after moving into the Gulf of Oman. Around 800 vessels remain stuck in the Persian Gulf. Amazon is investing $5 billion in Anthropic and may inject $20 billion more over time. Anthropic, the maker of the Claude chatbot, is planning to spend more than $100 billion over the next 10 years on Amazon cloud services and AI chips. Those shares up 3%. And Labor Secretary Lori Chavez DeRemer is leaving the Trump administration. She has been the subject of an inspector general probe following claims she engaged in an inappropriate relationship with a staffer, committed travel fraud, and was drinking in the workplace. That's your Bloomberg Brief. John.
Yahira, thank you. Appreciate the update. Up next on the program, Kevin Warsh in the hot seat.
I really do think Warsh is a great nominee, but I'm not going to have an investigation out there. We have to have an independent Fed, and we can't finesse this.
Up next, we'll catch up with Tony Rodriguez of Nuveen from New York City. This is Bloomberg Surveillance. Session highs up by 0.4% on the S&P, on the Nasdaq up by 0.5. In the bond market, 2s, 10s and 30s shaping up as follows. 2s right now up 2 basis points, 3.74. Under surveillance this morning, Kevin Warsh in the hot seat.
I really do think Warsh is a great nominee. In fact, the short list was great. I told the president that. But I'm not going to have an investigation out there. We have to have an independent Fed, and we can't finesse this. They either need to move forward with a compelling investigation that convinces me I was wrong, or resolve the current investigation and move on.
Right now, we're struggling to move on. Fed Chair nominee Kevin Warsh preparing for a grilling on Capitol Hill today, vowing to protect the central bank's independence while pushing for major reforms. Bloomberg's Mike McKee has the latest from Washington. Mike, you've gone through that prepared testimony. What are you focused on?
Well, Kevin Warsh addresses the elephant in the room right away by talking about independence. Remember, the president said he wouldn't appoint anybody who didn't want to cut interest rates. So the question for many Democrats is how beholden to Trump is Kevin Warsh going to be? He says in his testimony that I do not believe the operational independence of monetary policy is particularly threatened when elected officials, presidents, senators, or members of the House state their views on interest rates. Simply stated, Fed independence is largely up to the Fed. What does he mean by that? He goes on to explain the Fed has to take responsibility for inflation. It is the Fed's lodestar. It is the most important thing they do. And Warsh pledges he will keep inflation low and steady. But he also goes on to say that independence does not extend to other areas of Fed responsibility, including public monies. Think buying QE or maybe remodeling a building. Doesn't extend to bank regulation or international finance, which could be interesting because we've seen these reports about the UAE asking the U.S. for a swap line. Fed probably wouldn't want to grant it, but would he do it because the Treasury Department wants it? There'll be a lot of questions about the relationship between Treasury and the Fed. You mentioned the delay, of course, with Thom Tillis. The calendar for what happens next with Kevin Warsh is kind of compressed. It's up to Jeanine Pirro when they get a vote because Thom Tillis isn't going to change his mind and do any kind of vote, allow any kind of vote until she drops the issue. And he can't get confirmed until he gets a floor vote, which he can't get until he gets out of the committee. Jay Powell's last meeting is April 29th. That'll be next Wednesday, and it'll be very interesting to hear what he has to say. His chair term ends May 15th. He says he'll stay on if Warsh is not confirmed. The next Fed meeting after next Wednesday is June 17th. So a worst-case scenario might be that Warsh is confirmed by at least that time. I suppose you could do a double worst and say he stays on the sidelines for some time if the U.S. Attorney for Washington does not yield in her investigation.
They haven't taken the off-ramp so far. Let's see if it changes. Mike, thank you. The senator from North Carolina is not backing down and not backing down anytime soon.
No, he's not. And he's heard it there. We've been hearing this for months from Senator Tillis. He talked about this with us in Davos. He's basically saying there's no gray area for him. You can't fudge this. The investigation needs to be dropped for him to move forward.
Tony Rodriguez of Nuveen writing the following. We've incorporated Warsh's likely eventual confirmation into our forecast, which currently calls for 1/4 point rate cut later this year. Tony joins us now for more. Tony, good morning.
Good morning.
Timeline and policy and substance. Let's kind of play with timeline for a moment. Middle of May, Chairman Powell's term ends. Best guess, what happens next?
Well, I think Tillis is going to hold firm, as you mentioned, and I think that you're lucky if you'll see something by the end of the summer. We do think you'll see something by the end of the year because we think this investigation really doesn't, as you've seen with some of the court decisions, have significant merit to it. So I do think it'll eventually be dismissed, but you are going to have to wait well into the second half in our minds.
What will leave the door open for further rate reductions in your mind?
So in our minds, what leaves room is that right now we think they're above the neutral rate by, call it, 50 basis points. We think that as you get to the end of the year, you'll begin to see some of the negative economic impact on growth from higher energy prices. But you will also begin to see some of the pass-through of tariffs begin to anniversary itself. So inflation will end up, we'll call it closer to 2.5%, maybe 2.7 by the end of the year, but with an outlook in 27 for a decline into the low twos. That'll allow one cut to still be above the neutral rate, but kind of reflecting the path of inflation and some of the negative impact on the consumer from higher energy prices.
Inflation is a choice, and the Fed must take responsibility for it. Does that sound like a man who wants to cut rates?
No, but he also sounds like someone who's speaking to a market that is assuming his independence and his credibility is a bit tarnished by what happened through, we'll call it the interview process of all of this. So I think he's leaning into that hawkish history that he's had, but I think the market's really going to still be believing that he will be more dovish than what the rhetoric is and what his history shows.
Yesterday, Michael Kontopoulos of Janus came on, and he said that he could see actually a rate hike by the end of this year, just based on the fact that financial conditions are incredibly loose. It doesn't seem like people are particularly concerned about the Fed being overly tight right now, and inflation is still running significantly above that 2% target for more than a fifth straight year. So how do you sort of game out that likelihood or not in your fixed income outlook?
Yeah, and again, I think the main thing for us is that we do think you'll see inflation begin to recede as we get to the second half. We think that as long as energy prices remain kind of below $100 a barrel, and that still is our forecast that will be below $100 a barrel, inflation won't be the dynamic that is continuing to accelerate and requiring a hike, while at the same time, we do think growth will be negatively impacted by a couple of percentage points of GDP. Unemployment maybe stays steady to rise a bit, primarily because of the supply side element of that. So that stress on the consumer, we think it begins to show through in the economy, and that's where the Fed will begin to say, we don't need to be 50 basis points above our neutral rate. We can calibrate a bit. So it's not an aggressive cutting cycle by any means. It's just the end of the cutting cycle getting down to neutral that we think kicks in by the end of the year.
Tony, this is going to be a very high-profile hearing, and the political theater is going to be max level. But as a market participant, do you think there's anything market-worthy that will come out of this?
Quite honestly, we don't. I mean, I think there would be potential for that if he were to say, begin to talk a little bit more clearly to the markets about maybe his views on, say, balance sheet reduction, which he's talked about, on his views about where inflation is heading and why there could either be further cuts or not. You know, Mirren has been quite clear in his discussion of why he thinks there should be many cuts, whether you agree or disagree with it. If he's clear, then there could be some news. But from what we've seen historically in a lot of these confirmation hearings, they are more about political theater.
The questions
now,
are bad.
So unlikely.
Brutal, but true. They often are. A great question for the chairman of the Federal Reserve next week. Is above target inflation a choice at the Federal Reserve? I'd actually like to hear Chairman Powell's answer to that, because in the last news conference he was talking about being surprised by supply-side shocks that were kind of out of their control. I'd like his response to that next week.
Yeah, especially if ultimately a lot of people say it is a choice, and people have said that they have not wanted to torpedo the growth in the employment market really deliberately because they saw the scarring that happened after 2008 and 2009. They want to avoid that. So clearly they've prioritized this. Question is, how do you codify it and remain credible as an agency that's still trying to target 2%?
You might not like the medicine. Let's put it that way.
Correct.
The chairman talked about that pain. Remember the pain speech? We'll remember that. We were in Jackson Hole at the time when he was going through it. Then we didn't see much pain, did we? Subsequently in the years after.
Which, again, goes to the point of, is any Fed in the future willing to exert pain in terms of torpedoing the labor market? And is it worth it? Or should there be an escalation of the range of potential inflation targets to maybe between 2% and 3% rather than just have a 2% fixed target?
Tony, enjoyed this. It's always good to catch up with you, sir. Thank you. Tony Rodriguez there of Nuveen. Ahead of that testimony from Kevin Warsh, the Fed chair nominee, later on this morning in front of the Senate Banking Committee at 10 a.m. Eastern Time. We've got a lot of questions about policy, but our hopes are pretty low going into this when it comes to the answers we might get and the questions that will be asked.
Even if he gives answers, even if he gets to ask good questions, will people regard what he says with any credibility, given the fact that his comments were actually noteworthy and people are just like, yeah, that's what he has to say?
I agree. I think some of that in the opening testimony was fairly hawkish.
I agree.
But when you start to think about who it might be for and what purpose that is, and then people are willing to park it like so many other things right now in financial markets.
The less you know.
Up next, Katie Kaminski of AlphaSimplex Group, Walter Piecyk of LightShed Partners, Dana Peterson of the Conference Board, Troy Gayeski of Future Standard. The third hour of Bloomberg Surveillance, next.
Markets are becoming a lot less responsive to these headlines.
There is still a lot of hope and optimism in this market.
It was time for a bounce. There's a bonding happening across markets.
The market is over exuberant in terms of a fast fix to all of this.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. The opening bell, 90 minutes away. Your prices, your scores look like this. Equity futures on the S&P 500 firmer by 0.4%. On the Nasdaq up by 0.5. In the commodity market, Brent and WTI slightly lower, down by, let's call it, 1/4 to 1/3 of 1%, going into potential talks between the US and Iran. The day ahead shaping up as follows. Later this morning at 8:30 Eastern Time, US retail sales, a hearing for Kevin Warsh, Fed Chair nominee, later on at 10 a.m. Eastern Time in front of the Senate Banking Committee. Then after the close, Bramo, one for you. United Airlines, Scott Kirby, reporting earnings.
Yeah, to me, the airlines are the key players in all of this. We talk about the cognitive dissonance between the markets and what we keep hearing on the ground with respect to commodity strategists and beyond. The airlines bring that together. They have to get jet fuel to go places like the U.S. to Europe and then back again. And at what point will they not be able to? At what point are they seeing their jet fuel costs rise so much that the likes of JetBlue have to say, well, at least we're not considering bankruptcy? This is a new paradigm, and you're going to start to see it in some of the earnings.
It's another risk for the airlines. And at the moment, while in the United States, it does feel like we're a little bit more insulated, in Europe, the situation is becoming dire. Once again, Fatih Birol hitting the airwaves, talking about how the heat for him, this is the worst energy shock he's seen. And he has said that Europe is just 6 weeks away from running out of jet fuel. At the same time, the administration is taking a very aggressive posture. Just overnight, again, the U.S. boarded another Iranian-linked vessel in the Indo-Pacific. All of this while potentially we're supposed to have peace talks tomorrow, a second round. But right now, neither delegation has left their home state.
Perfect time to buy an airline. Looking forward to catching up with Scott Kirby in the next 24 hours. Lisa, catching up with the United Airlines boss. 9:15, I believe, tomorrow morning. Don't miss that. Questions not just about this energy shock, but also the potential for a combination in the airline space.
Yeah, one which has been shrugged off, at least by Americans, saying we have no intention of being purchased by United, nor would regulators sign off on it. Of course, there were these rumors that United was interested in doing so. Nonetheless, there are real questions about the likes of Spirit now asking for a government bailout. JetBlue saying, well, at least we're not declaring bankruptcy. Frontier, I mean, all of these questions about what kind of consolidation we could see that's very much ripe for the taking.
Well, Reuters reported that he actually floated this to Trump. So you got to find out from the CEO what the president turned around and said. Was he maybe interested in this? He likes big deals.
I'm sure he'll just, reveal all tomorrow.
I'm sure he'll engage in everything. This is what I'd like and at what price.
Yes, exactly.
I wish they would be that transparent, but I doubt we're going to get that later on.
No, but the forward look, though, is going to be really important, especially from some of these key players that have to manage on the ground and not just have the cognitive dissonance that we all have.
United Airlines reporting later on this afternoon after the closing bell. Lisa catching up with the CEO, the boss, Scott Kirby, tomorrow morning at 9:15 Eastern Time. Right here on Bloomberg TV. Coming up this hour, Kaminski of AlphaSimplex with stocks trading near all-time highs. Walt Piecyk of LightShed Partners on why it was time for Tim Cook to step aside. And Troy Gayeski of Future Standard looking ahead to the Senate confirmation hearing for Kevin Warsh. We begin this hour with stocks edging higher ahead of potential peace talks. Kaminski of AlphaSimplex writing, equity markets have been trying to look past the current conflict in Iran and find footing for a recovery from March. So far, this recovery has been a fit of starts and stops. Katie joins us now for more. Katie, good morning. Good to see you. What have you been more impressed / surprised by, the rip-roaring rally in equities or the stability in fixed income?
Well, I think I'd probably say the most surprising is the equity moves in terms of that you had a big reaction on Friday, then you had negative news on Monday, and it was sort of ignored. Fixed income is a little bit of a conundrum, and that's something I'm quite interested in because you're really balancing between inflation risk potential and where does the Fed go? And that is a little harder to sort of sort out.
Do you think there's some paralysis in the bond market then?
I wouldn't say, for me, it's maybe not paralysis. I think it's really trying to understand what this inflation shock means because we're so used to focusing on Fed policy and Fed trajectory. We're not used to sort of navigating what inflation shocks mean for bonds.
It seems like no one's really thinking about what an inflation shock like the oil one would mean for equities either. People are just buying and not thinking, again, in particular, buying big tech. Are you seeing an exhaustion of the technicals under the hood when it comes to some of the just buy the dip, knee-jerk reaction?
Well, you have seen, for us on the systematic space, we have seen sort of a deleveraging, getting out of equities, and now you're seeing flow coming back in as those signals are recalibrating. And so you're seeing not just that hope, but you're also seeing the potential push of market buying based on technical signals moving back into the market.
Where is it coming from? And I ask this because people are talking about how a number of countries like the Middle East have to retrench some of their funding at some point to try to invest in domestic concerns, especially following the war. There's an issue in Europe of how much to invest domestically with respect to the defense sector and beyond. Are you seeing any kind of regional patterns in terms of where capital is coming from?
That's a very good question. I don't really think we have a view on that. You do see that there is going to be some differences based on which areas have more energy dependence. And that is sort of the theme that we've actually been following a little bit more. It's more the idea that, you know, the U.S. is a little bit more sheltered from some of this, although eventually we will see that type of shock coming into potentially disturbing growth. Inflation has the ability to then disturb growth. And then, of course, you have to figure out how policy is going to navigate that.
As John or one of our guests mentioned earlier in the program, we're able to live with $80 oil in this country. Could we continue on this path with $100 oil?
I'd say, you know, that's where the time horizon really matters. If you look historically at how geopolitical risks have affected oil prices and supply shocks, when the duration is long enough, that's when you start to see the pain points. I think we're kind of hoping that the market's hoping that we can see through this and that we'll have some sort of resolution within the next month. The reality may be very different if we can't get to that resolution, and then the impact of those inflation shocks will be much more
Tricky question,
severe.
I know, but it's the obvious follow-up. What's long enough? It's almost 2 months. What's long enough?
Well, I'm sure, of course, the 60-day deadline, so around 6 weeks or longer, you're going to see after 60 days, then you start thinking about some of the congressional issues related to that. But I think at the point when you actually start people seeing the pain point, aka they want to buy a flight, they want to do this, and they can't, I think that's when you actually start to see people react when it hits them.
They're seeing it in Asia. They're about to see it in Europe.
Which is the reason why people keep saying from Europe and from Asia, what's going on with the United States? I mean, the European officials were in Washington, D.C. last week. They said, you know, we're feeling terrible. We're looking around. We're seeing the reality on the ground. And then we talk to the Americans, and they're like, woohoo, this is a great time.
Although it is showing up in the polling. A lot of families are saying, about 2/3 of polling done by NBC over the weekend, that gas prices are becoming a bigger financial strain on them and their families right now.
The S&P 500 is not the economy. We've gone over this a million times. It's anchored to so many other different themes. The big tech companies are still going to spend hundreds of billions of dollars. That's going to support this stock market. We're seeing that the AI ecosystem is taking off. Hardware, you see that in South Korea and other places as well. The earnings story, this is where things are a little bit more nuanced for me. Do you take comfort in the fact that earnings revisions and the estimates for earnings have improved through this war? Or do you maybe take a little discomfort from the idea that that's come from only a handful of stocks? So one or the other, and it's a difference of perspective, at least for me, when it comes to earnings and the outlook.
Yeah, is concentration risk a feature or a bug? Because ultimately, you've got a number of very big companies that are performing very well and delivering huge profits. Is that a good thing? Well, in times of stress, that's what supports the United States. And in times of weakness, people are saying, well, that's a ballast, because ultimately, at least you can depend on that. So it's sort of, heads you win, tails you lose kind of question. And people are really depending on that concentration right now.
Katie, it's good to see you. Thanks for being here. Katie Kaminski there of AlphaSimplex. Your equity market close to all-time highs, bouncing back this morning by 0.4% with an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. We'd start with our big corporate story. Apple naming a new CEO. Hardware boss John Ternus will replace Tim Cook on September 1st. Ternus has led the hardware engineering division since 2021, and sources say he's a strong believer in AI, where Apple, of course, has struggled to make an impact. Spirit Airlines is considering offering the U.S. government an equity stake. Sources telling us here at Bloomberg the discount airline is hoping to stave off a potential liquidation. Any proposed bailout is likely to get pushback from competitors. And Kevin Warsh's confirmation hearing is set for 10 a.m. this morning. President Trump's pick to be the next Fed chair will face questions about central bank independence and his rates outlook. Lawmakers may also ask him about his personal wealth, which of course includes assets worth at least $192 million. That's your Bloomberg brief. John.
Yahara, thank you. Thanks for the update. Up next on the programme, the morning calls, plus Walt Piecyk of LightShed Partners on why it was time for Tim Cook to step aside. That conversation up next, live from New York City this morning. Good morning.
The writing was on the wall with Tim Cook at some point to have stepped down. It did come sooner than we anticipated. But that being said, you kind of look at, where Apple is today and what they're pivoting into. And this is a critical year in terms of the shift to AI. I think it's the right move to hire a product guy. I think it's also the right move to finally pivot away from Tim Cook.
Angelo Zino of CFRA joining us a little bit earlier on as Tim Cook steps aside. Equity futures, okay, firmer by about 1/3 on the S&P, on the Nasdaq 100 up by 0.4. The one stock in focus in our morning calls, it's Apple. First up is Evercore, reiterating its outperform rating following the CEO shakeup, feeling encouraged by the potential for new AI features. Your second call from Morgan Stanley maintaining its overweight view on the stock, the firm noting near-term changes are unlikely. And finally, Wedbush reiterating its outperform rating on the iPhone maker, highlighting growing pressure for a successful AI strategy. Sticking with Apple, Walt Piecyk of LightShed Partners has been calling for a change at the top of the iPhone maker for nearly a year.
The suggestion that only Tim Cook is the CEO to run this company is crazy. You clearly need someone that can move forward on a lot of the product development. If they don't have a succession in place today, a CEO internal at the company that can take over this company today, that in itself is a failure of the CEO of the company as well as the board.
What reacting to Cook's resignation, writing Apple has stumbled embarrassingly on AI. This is clearly just a different skill set, and credit Cook for recognizing that and stepping aside. Walt joins us now for more. Well, welcome back. And I messaged you yesterday, credit for making a call 12 months ago. Can we just reflect on that briefly? Well, how much heat did you take when you published that almost a year ago?
I mean, I took a lot of heat, I think, even from some of the experts on Bloomberg calling the call blasphemous. And how can you dare suggest that Tim Cook could step aside, even though we were going through this monumental change in AI? But that's fine. I mean, that's part of the job. And the issue was never look, we've recommended this stock in the past. Tim Cook obviously did an excellent job, and what they needed was someone that could crank out volumes and make those tweaks. They missed out on some product cycles, and there's some growth issues. You have more cyclical growth now at the company when people need to upgrade iPhones. So the whole point of the call, last year was okay, you need it. And by the way, at the time, they're like, who's going to replace him? Who's going to replace him? Thanks for playing those clips. It's obvious. You generate someone internally. And if you weren't, that shows a massive failure at a company. So obviously the company didn't fail. They have Ternus here. The stock set, has done exceptionally well, even since last year. But you're facing existential risks to the company, as many companies are, as we head into this AI era.
Well, let's just piece that together. You used the word existential risk, and yet what I hear from a lot of your peers this morning is continuity and no near-term changes. Do you think this is the right person?
I mean, I hope there's going to be some near-term changes in the what's going on at the company, because they're clearly not on the right path in terms of an AI strategy. I mean, I think a couple of weeks ago or maybe a month ago, when they opened up who Siri can reference, and can we all agree that Siri just is still not good? I mean, we've been promised Siri is going to get better, and it's still terrible relative to what you use in any of the AI LLMs today in terms of an audio interface. But a couple of months ago, they added, they opened it up because they only had OpenAI before, right? Where Siri would theoretically forward you to OpenAI, to chat in order to get answers. That implementation, anyone that tried it, they realized that was not good. All they're doing is adding additional LLMs. That's not 4D chess. Many people are calling that 4D chess. That's not 4D chess. That's just adding another LLM to a Siri. That's just not good. So I think just because Ternus is taking over doesn't change things overnight. But hopefully, with a new CEO, he can change the culture of the company and move in a path that prepares them for what's about to happen with AI.
Walt, has the ship already sailed? Is there a competitor in the smartphone industry that already has gotten an upper hand in deploying AI in a better way than, say, Siri?
I mean, it's hard to know. We'll know in a year or two whether the ship has sailed. But I mean, and I said this back, a year ago, every day that they don't make a change is a day it's going to be harder for them to catch up or potentially get leapfrogged by someone. Obviously, Google is the major competitor in the space. This is 50% of their revenue is still iPhone. Services is still relying on iPhones. Android is obviously the major competitor. on the opposite side, their share has only gone up over the past year. However, we have this new thing. You have OpenClaw that has shown us what agentic can do. This is like kind of a nerdy thing that people do, but it shows you how close we're getting to agentic. Anthropic and others will start integrating this in. How we interface with our phones is likely to change. When you go through major technological transitions like that, that's when industry leaders tend to potentially lose share, right? Now, it doesn't mean Apple can. Apple's in a tremendous position to maintain that share if they can execute an AI, but everything that they've done up to this point has just not delivered on any promises or shown you some belief that they can continue to succeed in this area.
Well, they also have funneled a lot of their free cash flow into share buybacks and dividends. Going forward, as an investor, would you rather see a continuation of that type of deployment of cash, or would you like to see capital invested in, say, an acquisition or a new initiative?
I mean, look, Apple's done a great job without having to acquire a company. That the major acquisition they made was Beats, which was nothing in today's dollar terms, and really didn't change much at the company. The other thing that I think you're referencing is spending the tens of billions of dollars to build their own models, which again, that was the 4D chess everyone was talking about. Like, so they have avoided that. That's part of the reason the stock has done so well, right? All these companies that have invested money relative to Apple, who seems like, okay, they've escaped having to invest that money. The question is there going to be repercussions for that in terms of, them not having a product that consumers want or be positioned, where none of it may matter, right? It just might not matter at all, whether they spend the money or not. In that, if you're not using your phone because your agent, wherever that agent lives, is ordering your Uber, is ordering your DoorDash, is doing all these things for you, the way you interact with these phone, or maybe it ends up being glasses or pendants or whatever, it just is going to change. So whether they invest the dollars in an LLM or not, it might not matter in terms of what the important product is to Apple, which is the iPhone, which represents half of sales.
Walt, hearing you speak and looking through your research where you say, are there core cultural issues that need to be drastically changed in the company? Are people showing up to the office 5 days a week? It sounds like you're saying Apple's gone a bit soft.
I mean, look, the product development over the past 15 years, the last big product categories that were successful, at least, were, the watch and AirPods. And these are a product of Johnny Ives, who's no longer at the company. And I think there's been plenty of books written about, this tenure and the need to look for innovation, but just look at the lack of new product categories. You've had categories that they've attempted to develop. I mean, autonomous cars are obviously going to be a huge thing. There was a lot of dollars spent in Apple. They went nowhere. Vision Pro was kind of an effort in, I guess you would call it the immersive metaverse, and that was effectively a flop. So I think, at the end of the day, that's the cultural change that I think you need, meaning a CEO that's getting more involved with the product and the software teams to get products into the market, and maybe an overall culture at the company to drive to innovation as opposed to optimizing, chips, in their existing phones, or, moving the manufacturing to China in order to get better margins, or tweaking up the price of an iPhone, just to generate some revenue growth in a particular quarter.
Can Ternus do that with, of course, Tim Cook sticking around?
I mean, look, one of the knocks that people will say is like, oh, he's a hardware person and AI is a software. I don't think that's really the issue. I mean, you have to be, I think, product focused. I think he kind of checks that box. Willing to work with the team. I think he checks that box. He's termed, I think, a nice guy. But I think, perhaps more involved with, putting pressure on teams to get things done. So sure, he can be the person, but there's obviously risk. Like, this is a mega company. We've lived with Tim Cook for 15 years, who's done an exceptional job at the skill set that was needed. So there's obviously risk. No one really knows, until you're seen. You have the NFL draft coming up on Thursday. You can pick what you think is the top player, the top quarterback, right, and it could be a complete flop, or the guy can take you to the Super Bowl. So, we'll just have to see how that plays out.
Well, I just wanted to finish on something that I know is important to you and to the team over at LightShed. I've known you a long time. I've never gotten the impression that you are willing to massage the message out of fear of losing access to a management team. I think that's really what LightShed is born out of, together with Rich Greenfield, your partner, who on countless occasions upset Bob Iger over at Disney by putting a sell on the stock and communicating quite clearly what he thought about the strategy and why he thought it was failing. Well, what do you think we can all do better? Not just on this particular occasion, but just for the whole industry. And I don't just mean on the South side, by the way. I mean the media industry as well, because I think many people in journalism are guilty of the same thing. Whoa. What do you think we can do better?
I mean, I get it. Like, there's definitely pressure for access, whether you're a reporter or for an analyst, and there's value in being able to actually talk to these people directly. But at the end of the day, truth is what matters. Whether you're getting leaked some information or not, to have a great story, you still have to kind of call out what the issues are in terms of AI and whether there's change that's needed. And I don't know, like, it's just the way you approach it. Earlier this week, last week, you saw someone interview Jensen from NVIDIA, and I thought it was very telling. And the interviewer did a great job. Now, maybe that person, Dvorak, I think his name is, will never get another interview again with NVIDIA. But like, the value of that interview and seeing what Jensen's views were on, how they dealt with China, what competition was like, I think was incredible. And, it helps us all to have more of that. But look, there's a cost. There's clearly a cost that we see every day in dealing with this. But always truth, John, always truth.
Well, appreciate it, and credit to you and the team. Walter Piecyk there of LightShed Partners. We've seen that a few times, and we all get uncomfortable when we feel like someone's massaging the message to maintain access.
I mean that everyone has a buy rating on absolutely everything and nobody has a sell. Look, this is a difficult moment, especially because there's a fear of groupthink. And how much are we all thinking in the same way that AI is going to revolutionize everything in a sort of unilateral way that will lift most boats? Given how much money is going into the space, that is one fear that people keep highlighting. How do we pick the winners and losers? And are we suffering a little bit from groupthink?
I just sense we're dancing around that tension a little bit this morning as well, because at the same time everyone is calling this a continuity candidate and saying there will be no near-term change, we're also talking about massive change in this sector and breaking into a new era of innovation. Isn't that a failure to sit here and say we're talking about continuity and no near-term changes when we're going into that?
It's incredibly uncomfortable because ultimately he cannot be a continuity candidate, because ultimately continuity isn't going to meet the moment, which is going to be revolutionary change. Nonetheless, he has been at the company for 25 years and understands the culture and was sort of focused on the hardware. So to the degree that he has just been at the company a long time, yes. Whether he can actually revolutionize and bring the company into the new era, that's really what people are waiting to see.
Stock is down by a few tenths of 1% so far this morning. Equity futures on the S&P 500 just pulling back from session highs, now up by only a third of 1%. A report from Axios just moments ago, with the chairman of Joint Chiefs of Staff's General Dan Kane saying we are ready to resume major combat operations against Iran in a moment's notice. That coming from Axios just moments ago. Setting the stage for potentially some tense talks. Retail sales data up next. We'll have a reaction for you in just a moment. David Solomon, Goldman Sachs. I think this will resonate with many of you. Recession risk could change. Only one tweet away. Kind of relevant to this morning and how things are set up as well, potentially going into talks a little bit later with the US and Iran. Equity futures on the S&P 500 firmer by a third of 1% on the S&P, on the Nasdaq up by 0.4. Retail sales data just around the corner. Your bond market shaping up as follows. 2s, 10s and 30s. Bond yields look like this. Yields higher by a single basis point on 10s, up 2 or 3 on 2s. With your data, let's cross over to Bloomberg's Ender Curran. Hey, Ender.
Good morning, John. Just waiting for the retail sales numbers here. The headline number is up 1.7% to 1.4%. That, of course, likely reflects a big increase in gas prices. If you look at the sales, ex-autos rising 1.9 to 1.4%, and the control group is up 0.7% to 0.2. So just going through the numbers, John, the control group is the one that we look at because the headline number is impacted by higher gas prices. And of course, we know car sales have been stronger. So it's getting a sort of skewed effect because of what happened in the month of March. But that control group, which strips out gas prices and cars and the like, that increasing there 0.7% above expectations, hinting perhaps at some of residual strength from the tax refunds. And, of course, higher income consumers also keeping things ticking over there. So better than estimated for sure, but also likely reflecting some one-off impacts due to the tax refunds. So kind of a mixed story, I would say, in the retail sales number so far.
So far, so good, though. If you put it all together, the totality of the data is surprise to the upside. Resilience I'd go one step further than that. That's a decent upside surprise. Control group coming in at 0.7, the estimate 0.2. Equity futures holding on to gains, higher by a third of 1% on the S&P, up by 0.4 on the Nasdaq. If you turn to the bond market, yields were higher by some 2 to 3 basis points, now 3 to 4 on the front end of the curve. Two's at 375.81, up 2 now. So an additional basis point higher on a 10-year to 4.2727. That, together with other data points as well, Lisa, over the last several weeks, the data has been better than expected stateside.
Yeah, we've seen incredible amounts of surprises to the upside in terms of economic data. And it wasn't just that the actual headline numbers came in higher than expected. The actual previous months were revised upwards. So you're getting not only a sense that this past month, as we did see gasoline prices increase, you saw retail sales increase, but it actually was off of an even warmer retail sales the previous month. Look, all of this just points to the idea that you're getting upside surprises in an economy that is supposedly being slowed down by higher oil prices. Those messages are uncomfortable to put together and just highlight how difficult it's going to be for the Federal Reserve to justify cutting rates at a moment with inflation and, frankly, evidence of strength in the economy.
Enda, I hope you're still there. I want to come back to you. Just got a quick follow-up. The story that Kevin Warsh has got to tell in front of the Senate Banking Committee later on this morning, has he got a good story to tell about the US economy?
I mean, it's complicated, like you're both just outlining, John. On the one hand, we know his kind of backdrop to getting the Fed chair job, if he's confirmed, has been he sees a path to lower interest rates. But how is he going to map out that path, given, as you said, the economic data is holding up okay, the employment market is holding up, and of course now we have the Iran energy shock complication as well. So on the one hand, he has to get across the signal to the senators and the audience listening today that he can maintain credibility, he will do what's right for the economy first. But also, of course, he's playing to the political audience, the White House, President Trump, of course, pressuring the Fed to bring down lower interest rates, and he'll have to give a signal that he's open to doing that as well. So it's clearly going to be a very tricky balancing act for him to pull that off.
Enda, appreciate your time. As always, sir, thank you. Enda Curran there of Bloomberg down in Washington, breaking down the economic data. Headline, month over month, coming in at 1.7%. The estimate was 1.4. If you strip out autos and gas, that comes in at 0.6%. The estimate was still 0.3, so it's an upside surprise. The retail sales control group, important factor, gets plugged into GDP, comes in at 0.7%. That's an upside surprise relative to an estimate of 0.2. And as you pointed out, Bramo, better reads for the month before as well, almost across the board.
This points to strength, especially given the fact that when you strip out autos and gas, you still see that better than expected retail sales component. It also speaks to what we hear from a lot of different executives on corporate calls. We hear about how the consumer is still strong and still spending, and that's the reason why you're getting these upside beats. So maybe the less you know, or maybe this is what we have to take away from what we're getting from all of the earnings, which is better than expected U.S. economy that's able to weather this particular oil crisis.
How many times have you used that phrase this morning?
I'm going to keep using it. I think it's wonderful.
That was
Thank you, Chris.
fourth, I think,
right?
minimum. That was your fourth. I'm counting.
Thank you.
Keeping a tally over
Poorly
here.
informed and optimistic, just ride the bull market.
I think
that's
that's
worked
great.
very well for a long, long time.
Dumb and rich. Let's do it.
Alex Altman of Barclays, I think, put into perspective last week when we were in D.C. and I was struggling because what was going on? The straight, nothing has changed. And he said, look, it's really, there's going to be fits and starts on the way up or down, but you have to decide directionally, are we moving upward or downward? And he said, it's upward.
Don't drown in the nuance. Dana Peterson of the Conference Board joins us now for more. Dana, welcome. Decent data. Retail sales looks pretty robust. Have you got confidence in the outlook for the economy?
Well, honestly, that's all nominal data. What happens when you fold in inflation? Indeed, I haven't seen the real data in terms of the percent over percent, month over month percent change. But for the most part, consumers are shifting their spending. They're not spending as much on things that they want. It's more on things that they need. And we definitely need to strip out that inflation. So I think the US economy will still do okay, but we're going to grow at a slower pace. Again, because a lot of the increases that you're seeing on a nominal basis are due to prices, not only tariffs, but also the shock from the oil prices, as well as the pass-through to consumers for the supply chain disruptions.
Dana, let's say I'm the consumer. You track confidence levels. How big is the gap between what they say and what they're doing?
Well, I don't think there's a really big gap. When we look at our own consumer confidence measures, consumers are saying, yes, we're still working and that's great, but we're not happy about the inflation. We're not happy about the fact that price levels are so high and now we're seeing them rise even further. And so our last measure indicated that consumers are wary. But again, as long as they're working, I think they can make it through.
I'm looking right now at the breakdown of the retail sales figure, and you can see a 15.5% increase in expenditures at gasoline stations. That makes sense. It accounts for the increase that we've seen in gas prices. But you're also seeing a better than expected read for furniture and home purchases, up 2.2%. You just start to wonder, Dana, is the read-through here that even though gasoline prices have increased as much as they have, people still have discretionary spending to go out and to put to work, especially at the higher income that might be doing a lot of the heavy lifting here?
There is some discretion. There is some discretionary spending, and I think a lot of it is happening among those with higher incomes. But again, these are nominal numbers, and things like furniture are going to be impacted if there are tariffs on them. So that's the price. And so you have to strip out the pricing. And what we're seeing is certainly in the confidence measures and even in the hard data is that consumers are shifting what they are purchasing. They are moving towards things that they need rather than things that they want. And if they do go after something they want, they're doing it in a very inexpensive way. So I think that's something material and something that should be continued to watch.
Dana, are you seeing signs of scarring in pockets of the overall consumer? Because the overall average data doesn't suggest that to be the case at all.
I don't think there's scarring. Again, if we look back at 2022, 2023, we had much higher inflation than we do now. But the key was that most people were working and wages were averaging above pre-pandemic levels. And that's still true today. Most people are still working. The unemployment rate's super low. Jobless claims are infinitesimal. And so that means that consumers do have the bandwidth to work through the inflation, but it doesn't mean that they're not kind of economizing. And we're seeing that in our surveys.
Dana, thanks for weighing in and reacting to that breaking news. Dana Peterson there at the conference board on US retail sales. That's probably the strongest counterpoint to the inflationary fears right now. The labour market is not as tight as it was. Wage growth is certainly not as hot. Consumers aren't in a position to support those higher prices in quite the same way.
And the reason why you haven't seen the rate of wage inflation increase at any kind of pace, in fact, it's actually fallen to the lowest, I believe, since 2021. That said, I just don't see the weakness in this data. The fact that retail and food services increased 1.7% in the March data versus 0.7% in the February data points to people who can still go out and spend money and go to the bars and go to the clubs and go to restaurants and buy clothes. I mean, but this is, you just wonder how much.
I'm only laughing because is that what you're doing with your extra time and money?
Describing absolutely no one around this table, right?
Literally. Okay, all right. Going and buying.
We go to bed at 7 p.m. What are you're doing?
All right, but look,
nice.
Look, moving forward, it just points to resilience, and you just wonder if it's averages driven by top consumer. I'm going to stop talking.
Just describing the life you want to have.
Yeah, 100%.
Right,
we're manifesting right here.
Be aspirational.
That 4 p.m. dinner reservation. Yeah. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Recapping that data we just got, U.S. retail sales coming in a tick above estimates at 1.7%. A big bump up from February's figure. Excluding volatile auto and gas categories, retail sales seeing a 1.9% gain in March. The control group also rising 0.7%. That was 0.5% above estimates. U.S. and Iranian negotiators are headed to Islamabad for last-minute ceasefire talks as a fragile 2-week truce nears expiration. Neither the U.S. nor Iran have confirmed the timing of talks. U.S. Joint Chiefs of Staff Chair Dan Kane telling Axios, quote, "We are ready to resume major combat operations at a moment's notice." And Senator Elizabeth Warren asking SEC Chair Paul Atkins to investigate Defense Secretary Pete Hegseth. Warren citing a media report that a broker for Hegseth tried to purchase shares in a defense industry fund before the Iran war. Atkins speaking now at the Economic Club of Washington ahead of an interview with Bloomberg's David Rubenstein. You can watch that interview on the terminal at LiveGo. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next, we'll catch up with Troy Gayeski of Future Standard, looking ahead to the Senate confirmation hearing for Kevin Warsh. Plus, Stanley's back. She's got your morning movers. Shares of 3M sliding on a sales growth miss. That stock is down 3%.
Tim Cook obviously did an excellent job, and what they needed was someone that could crank out volumes and make those tweaks. You know, they missed out on some product cycles, and there's some growth issues. You're facing existential risks to the company, as many companies are, as we head into this AI era.
That was Walter Piecyk of LightShed Partners weighing in on the change at the top of Apple. Tim Cook stepping aside as of September. The new guy stepping in, and the new guy has got a background in hardware. Lots of questions about the continuity and the changes we can expect.
Yeah, is this going to be somebody who is going to play it safe, or is this going to be someone who's going to come out with a foldable phone that can also speak to you, that can really compete with the latest and greatest in the AI universe?
Do you want a foldable phone?
I don't understand it. I did a lot of research.
I saw one over the weekend. My friend's mom has one.
And?
It's Samsung. I think it's like convenient, especially if you drop your phone and it's foldable, so the glass won't hit the floor. But I don't love the crease then when you open it up. I think it's annoying. And then to put it in your pocket, it's tinier, but it's like thick. I don't think it works.
Okay, we'll see if we get one. That's Apple. More on Apple now. That and some other morning movers, some single names with Danny Berger. Hey, Danny.
Hey, John, just want to check on the price of Apple this morning. It's not moving tremendously, slightly weaker. Again, with that news that Tim Cook will be stepping aside come September. Dan Ives of Wedbush basically writing that the timing will create questions, even if this move makes sense, and it is big shoes to fill. So those are the results there. Finally, some earnings that we're looking at, 3M among them, missing on sales, even though their EPS beat. They're also sticking by their full-year guidance, the CEO citing geopolitical uncertainty. But it's also a CEO that's been trying to right-size the company, focus on core, spin off non-core assets, still shares down 3%. Surprising to the upside with earnings, though, was United Health. And this stock has been beaten up over the past year. But this time around, it beat its earnings by the widest margin in 5 years. It upgrades its view for the entirety of the year. Medical costs come down, so those shares up 7 1/3% in the pre-market, John.
Hey, Danny, thank you. Thank you for the update. Looking ahead to Danny's program alongside Matt Miller in about 15 minutes' time. Look out for that as they count you down to the opening bell. As we count you down to the cash open, this is what you need to look ahead to at 8:30 Eastern time. Just 15 minutes ago, we had retail sales coming in stronger than expected. Looking for more data and more earnings through the week. Some PMIs coming on Thursday. United Airlines reporting after the closing bell alongside Tesla and IBM on a Wednesday, so look out for that too. And then the main event for many of us today is the Kevin Warsh hearing taking place down on Capitol Hill in front of the Senate Banking Committee at 10 a.m. Eastern time. Mike McKee's dropping by for a little bit more on that. Mike, welcome to the programme. So the President was speaking to the press earlier on this morning. He was asked about this, and I imagine this comment and this response is not going to help Kevin Warsh in front of the Senate Banking Committee. He'd be disappointed if the new Fed chair doesn't cut interest rates.
Yes, and John, the question that he was asked was, would you be disappointed if he didn't cut interest rates immediately? And there's no prospect of that given the way the economy is going and, of course, given the way the war is going at the moment. Now, Warsh is going to address that elephant in the room right off the top of his opening remarks, saying that it's the president's opinion and it's not something we have to worry about. He says, I do not believe the operational independence of monetary policy is particularly threatened when elected officials, presidents, senators, or members of the House state their views on interest rates. Simply stated, Fed independence is largely up to the Fed. In other words, if we ignore what the president or anyone else says and do what's right for inflation, then we won't have a problem. And he says inflation is their lodestar and low and stable inflation is the requirement, and he will pursue that. But there'll still be questions about how and what else he wants to do at the Fed, including going back to a scarce reserves regime. That would create a lot of upset on Wall Street. How would he manage that? What's he going to do about shrinking the balance sheet? Would he sell mortgage bonds? Those are the sort of questions that are going to preoccupy members of the Banking Committee besides the questions about Trump.
Mike McKee with the latest. Looking ahead to your coverage throughout this morning. Mike McKee on Capitol Hill this morning ahead of that hearing. Troy Gayeski of Future Standard writing Warsh is clearly going to be in a tough spot for a while as the ability to cut further will be somewhat constrained. Troy joins us now for more. Troy, good morning. Good to see you.
Good morning, yeah.
What are you looking for in about an hour from now on Capitol Hill?
Yeah, so it's going to be more about the articulation by Warsh about how he's evolved from being a very hawkish fellow to one that's much more dovish, and then how he's going to preserve Fed independence while still being responsive to the federal budget deficit situation, which can benefit greatly from lower rates.
That's a delicate balance act.
It is.
How close do you think he'll be working with Treasury?
Well, when you think about the harmony between the two, right? and you think about the continued path of rates falling in the short end and his desire, at least historically, to shrink the balance sheet, the Fed is back to expanding their balance sheet now. It's one of the reasons that money supply is expanding again, one of the reasons equities arguably have been so buoyant even through the war. So that is a delicate balance for he and Bassett to get correct. The whole game plan for the Fed, the way we saw it last August and September, was for them to cut maybe more aggressively than they had intended, caused in part by political pressure from the president. Bassett would issue like crazy in the front end and starve the back end of supply. And if you could move that front end down to 2% more rapidly, then a 4.25 back end made sense from a yield curve steepness standpoint. Our concern now is the longer the Fed hangs out at 3.5, the longer it takes them to cut, the more likely you can have a nasty bear steepener, which clearly isn't good for equity multiples, for commercial real estate equity, for mortgage refinancings, all those things that are part of the affordability agenda. So when you want to run an economy hot, one of the ramifications can be a materially steeper yield curve.
This doesn't seem like somebody who wants to run the economy hot, just based on the testimony that was released, or at least that Politico reported on, talking about how inflation is a choice, the Fed must take responsibility for it. Why is the market ignoring the fact that Kevin Warsh was a hawk and still kind of sounds like a hawk?
Yeah, well, look, if you think of the price of what was cut in or priced in this year for cuts, right? Clearly, there was around 100 at one point. That's backed off substantially. It wasn't too long ago you guys were running headlines about implied market probabilities of the Fed hiking. So I think it's hard to argue that the market's saying Warsh is going to get in there and boom, we're going by 100 right now. That being said, if you assume that productivity growth stays as strong as it is, and you assume that there's continued disinflationary pressure from technology, which is most of the last 20 years, we know the labor market's weakened substantially. It's still relatively strong. The consumer is relatively strong. There is scope to cut further. The debate, and no one knows the answer, is what is the new neutral rate? Is it 2 or is it 3? Economically, there isn't that big of a difference between 2 or 3. From an inflation standpoint, there isn't that big of a difference. But there's a heck of a difference in servicing debt when you're issuing $2 trillion per year. So, comments come and comments go. It's going to be really key to watch the action that takes place the first 3 months in terms of building consensus. Should we go by how fast, to what degree, and how markets react to that?
Why do people still think that this is relatively tight monetary policy, given the fact that that financial conditions have eased dramatically? The capital markets are wide open, that the economy seems to be chugging along, and that there are no signs of constraint except for small pockets that are affected by other exogenous factors. Yeah, and to take it even one further,
obviously private credit's been in the headlines quite a bit these days. Courtesy of your esteemed institution. And, if you think of floating rate borrowers, they were one of the few that actually suffered from tighter policy, right? And what's happened, the last 18 months, 16 months, is interest expense has gone down by about 15%. So that's one pocket that actually benefits from that. Additionally, if you look at, maybe subprime borrowers or those that are more rate sensitive at the low-end consumer, they benefit from lower rates. But your central point is true. Financial conditions are not overly tight. That being said, it still has substantial savings for the go-forward budget deficit situation if we can issue very aggressively in the front end and starve the back end of supply.
I don't think you can underestimate the importance of financial conditions. Mm-hmm. We talked about this when the shock first hit. The financial markets can shape the events they anticipate, not my line. We've talked about that a million times. The fact that financial conditions have eased will support this economy in a way that you want it and need it to at a moment like this one, because this is a real economic shock and you will see ripples in months to come.
Yet markets are doing the Fed's work for it. The Fed doesn't have to cut rates because essentially the market is wide open and companies can still issue debt. Question is just how much it's a bifurcated open market in terms of welcoming any kind of high quality, well-heeled company, not necessarily individuals that fall on the other end.
Troy, Bramo's right. Is this market just open for massive hyperscalers issuing a lot of debt? Is it just open for big open AIs, Anthropic type companies to come to market and IPO in a few months, or is it open to more than just that?
Yeah, it's a great point. So one of the things that you've written about, we've discussed, is the IPO market has been relatively shut for companies that aren't go-go growth or hyperscaler. And, that's one of the reasons why it's been tougher for large and mega cap PE firms to exit their positions, that are growing at 3 to 8%. Fortunately, we'd say, in the middle market, most of the exits are to larger sponsors or to strategic acquirers. If you look over on the private credit side, issuance was very, very robust late last year. That's certainly slowed down with the change in flows and the change in insurance company appetite. Wider spreads, right? Wider spreads, you tend to have sponsors that sit back and wait for conditions to ease to some extent. I wouldn't say it's bifurcated, but I think the market is getting more discerning in terms of what it'll finance in private credit and private equity. And exits for large and mid-cap sponsors, you really need to see the IPO market broaden, which could happen if financial conditions ease further. But to your broader point, they've been easy for quite some time. I mean, 22 was really the last period of significant financial condition tightening. For most of the time period, other than Liberation Day and obviously the war, it's been wide open for anything that's high quality.
There was a massive worry we'd see a repeat of 22. Central banks hiking, simultaneous sell-off in stocks and bonds. You saw it for like a heartbeat. People started to price in hikes. Stocks and bonds sold off. It's good news we haven't seen that continue.
Yeah, people point to the labor market and the fact that it just isn't as tight as it was back then. The fact that also we're not getting the same degree of fiscal stimulus, even though that we are getting some fiscal stimulus. Ultimately, though, we're going to have to wait for the data. The data so far, pretty good.
It's
at least
not bad,
according to, I mean, honestly, people are buying a lot of things going out.
Yeah, and John, if I could jump in there one
Please.
second. Yeah, so I think, there's confusion from time to time, right, in that 2022 was really a result of three and a few other necessary conditions for an inflation surge. One was we printed 42% of money supply out of thin air. Two was we had 2 job openings for an unemployed person. And 3, we had $2.2 trillion of excess savings that was being spent.
Things have changed a lot.
Things have changed a lot, right?
Troy, it's good to see you.
Great
Thank
to
you,
see
buddy.
you too.
Troy Gayeski, a future standard. That testimony from Kevin Warsh about an hour away from New York City this morning. Good morning. This was Bloomberg Surveillance.